Are we Gucci or nah? Or nah? Or nah? Are we Gucci? Yeah, we're Gucci. Yeah, I was trying to I was trying to talk to Anthropic support. My weekly limit just reset today, and then I used like the first usage window, and it says my whole week is done. I don't know why. It's like I did not use a whole week worth of usage. I'm trying to figure out what was going on there. No resolution to that, which is quite annoying because I was in the middle of making something, but whatever. Whatever. Oh yeah, the link. Reclaim or nah? Or nah? Yeah, I mean, in terms of where we got off yesterday, kind of everything's going according to plan, right? Where do we have this volume profile drawn? This thing is trading view still fucking up. What the hell? Yeah, when we talked about shorting in this region, right? They gave you a nice juicy opportunity earlier today. We took that to whether you shaved or not at this point, up to you. Might be getting close to getting stop at break even. But yeah. Other than that, kind of still hanging around here, right? We did do like obviously it's not like a 3 drives per se, but like these are like 3 lower lows as like we're diverging here. There's a bunch of other stuff that's going on in the data. Don't feel like I'm talking about it right now, but you know, you fucking know, right? If you know, you know. Real question is, can we go from here or not, right? Can we kind of reclaim this region and start going up or not? Or not? Update our levels. Oh, come on. Oh, nice. Is it today? I'm so fucking tired. It's crazy. I had the most ridiculous workout today. Back mega fried. Nervous system hella fucking fried. And I had to shovel my driveway again. Way more snow. Got like 2 back workouts today, basically. Where is the levels? 6, 7. Look at this in a second. We're missing a level still, right? Yeah, we never updated this shit, right? I made an indicator for all this stuff, but not the value levels. Out of curiosity. Out of curiosity. Bum, ba, bum, ba, bum. Okay. Done with that shit. Boom, 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 boom. Okay. Jonathan Brawler. Hello, I have a question. What is your question? Question do you have? Bum, 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 bum. Everything else doing? Okay. Interesting. Bum, 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 bum. Jonathan Brawler, no question, huh? No question. Oh, interesting. Interesting. Anyway, just get the rest of this stuff set up. Boom, boom, boom. How long is left on this? God damn. God damn. Does I have alarms on this stuff? Is that like that? Boom. Hmm. Interesting. Yeah, this Claude with the 5.3 codex from ChatGPT is pretty good actually. Pretty good as well. Also way more efficient in terms of credits. I'm using it for a week straight now and I haven't even like hit a limit once. And it's like doing stuff non-stop. And like the UIs it makes with the user experience side of things is like a much better than Claude. Maybe I don't have the best prompt for that thing to like make good UIs, but what was I needed to do? I'm so tired right now. I can't even think, man. What the fuck do I need to do? Oh yeah. Boom, 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 boom. There's just too much to do. I was listening to this Moonshots podcast at the gym. I did it with the what's his face? I think it's the CEO of that robotics company, Figure. Pretty interesting stuff. Although it does, from what I'm gathering, seems like getting like functional robots like Optimus and whatnot, like going is not that close. Like I know Elon Musk has had some pretty like aggressive timelines he stated with that stuff, but I mean we'll see, I suppose. It wouldn't be the first time that guy's timing is a little off. Like directionally correct, but not to the best timing. Overly optimistic, perhaps. Yeah. Why did we ask this? Shit, I'm actually so fried. I have to rewind the stream. Or was this? Up or not? Or not? Update hour 11. Oh yeah, okay, I remember now. That's so annoying. I want to like trading view is like a, I don't know, man. A grief. What I wanted to do was like pull all these levels in via some like API or something. Does not seem like it's possible. Hmm. Geo Gonzo short BTC to 55K. Possibly. We go that low. Definitely in the cards though, we'll say that. But yeah, I'm in a short, and that is like the next zone. I'm like not that low, like I think like 57, 58, more than anything. But I already like closed out like so much of this thing. Like I was in it from like third off as like a hedge. I was up here and we didn't like finish clearing the zone for my long TPs, so it was like a hedge short at first, just to, like lock in the gains. And then I started just like adding as we started to like roll over. I closed most of it on this move. Added back a little bit last night, like while we were streaming actually. Yeah, that is the next zone I'm looking at. But we'll see though. We'll see. CPI on Friday. Because this move was looking like relatively strong. Now it's kind of like lost momentum on the long side. We'll just have to see how it goes. Seems like most spot whales got the same thing in mind though. There's like a fucking million Bitcoin buys down here. I think they're waiting to load up the bags down here. Question is, do we make it or not? What is this? Between 60,000 and 50,000, it was like over 2,000 spot Bitcoin. We're trying to load their bags. Load them bitches. We'll see. If we start to reclaim this level, it's going to be starting to get like a little bit suspicious. We're probably going to come get like at least this stuff, maybe up here. But there's still a massive CME gap above us, right? This gap is just looming up here. Let me know YouTube emojis. I never use them. I don't know. Like I don't watch any streamers on YouTube. So like or like comment on YouTube videos. So can't seem particularly familiar. Although I will say it is a bit odd that they have like so many like YouTube specific emojis. I don't know what half of them are. Like, if I hover my mouse over your message, it doesn't even say like English version of what it means. Fish, orange, wide eyes. Shout out to us. Shout out to us lurking in the chat. Yeah, I think there's a bunch of shorts got trapped down here earlier today. But they ass trapped. I need to stand up. I'm gonna literally fall asleep. I'm so tired right now. Also, we need to watch one of these videos. Where is this dying? Is that even right? What? Oh. What to say? Imagine. Hymns, hymns, hymns. Oh yeah. Do they have this information on here? supposed to be a trading view one for this. Allegedly. This thing has got to be wrong, right? Seems like it's wrong. %. Interesting. I will keep this in mind. I don't know if it's gonna get that low. Like maybe if this thing like ends up correcting, then like yeah, but push down. Like the chart's pretty fucking cooked right now. and the short interest and the float ratio is the highest it's ever been. On top of like all the technicals like getting pretty fucking cooked. And the earnings are coming up. Might better just kind of dip our toes and scale into that thing towards that zone. I mean, these things are just fucking like no stopping, right? Just plowing ahead. That is crazy. I don't think there's anything else needed to do, right? Also, man, that Unity thing we were looking at before going home for Christmas, sure ended up nuking. We were sitting here like, oh fuck, we missed it on the breakout. Came right fucking back, goddamn. How do the Hinds end up closing? Nice. Nice. It got down way lower on the open after like the earnings, and then came all the way back. Close above. Love to see that. Interesting. Interesting chart that one is. Bum, 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 bum. I'm getting hungry. But I'm getting hungry. Okay. Let's watch one of these things while I get some food. Am I supposed to eat for dinner today? Or posted dinner meal? I don't remember.
So co-managing.
Okay. Close this. I think let's get some food and we'll kind of watch this thing. This is a long one. Damn, goddamn, goddamn. Goddamn. That's a long time.
They're just 24 years old. Now, at 24 years old, they're also co-managing and backtesting, all automated. Make sure you check them out. Everyone to Words of Wisdom, the #1 trading podcast.
Yeah.
Oh, Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção. Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção. Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção. Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção. Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção. Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção. Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção. Batuque brasileiro, na onda tem pandeiro, bate meu coração, no ritmo da canção.
these people just called me back. So, yeah, maybe a second or two. Okay.
in the world and the fastest growing thanks to all of you and our incredible guests. We're still on our US tour, the second of the year. And our tours are only possible thanks to our incredible sponsors, TradeZella, the #1 trading journal in the industry, and backtesting, all automated. Make sure you check them out. The links for them are in the description. Massive thank you to them. But back to our incredible guests. I've actually wanted this guest to be on the podcast for a very, very long time. I can't remember exactly when I followed them, but you know, the amount of value that they put out on X is incredible. And you would never guess from the wisdom that they share and the value that they share that they're just 24 years old. Now, at 24 years
What
old,
to say?
they also
I see this guy's shit all the time. All the time.
co-managing over $20 million at Revere Asset Management, which has around $400 million under management as well. We're going to go straight into it. It's the one and only Ted Zhang.
Thank you for having me on, Riz. I'm grateful to be here.
It's my absolute pleasure. My absolute pleasure. We were meant to have Connor on, right, who you're co-managing this capital with.
Last week in Miami when you're there.
Exactly, yeah. Unfortunately, we weren't able to do it then. We're going to rearrange, but we have you, Ted. Yeah, we're here for you as well. And I want to get straight into it. As I mentioned there, a lot of people are going to be probably wondering, how is someone at 24 years old? And one thing I forgot to mention is that you don't have like a financial background in terms of like a financial degree or diploma, but yet you're in this position where you're managing multiple 8 figures, you know, at an asset manager that has multiple 9 figures. How did you do that at just 24 years old?
Yeah, so this goes back to heading to college. Like you said, I don't have a finance degree. I went to college wanting to become an oral surgeon, oral maxillofacial surgery, and I studied biology on a pre-medicine track. But freshman year, so I graduated May of 2023. I matriculated into college fall of 2019. As we all know, the world shut down from COVID spring of 2020, and we were all sent home for spring break. My dad was watching CNBC. Everything is crashing. There's red all over the screen, and that's when I got into the markets, introduced to the markets. Didn't really know anything, but we can talk about like the details of my story maybe in a little bit. But fast forward, throughout that time, I built a personal brand on X. Maybe you guys already follow me, and when it came to it around summer senior year or summer after junior year, I was like, I'm not feeling going to dental school. You know, interest rates are high. Fed jacked up the interest rates. I had to take on probably $500,000 in debt, and then I wouldn't get out of school until I'm like 31, 32. So dental school is 4 years. So I would have entered at 22. I would have got out at 26. Oral surgery is another 4 to 6 years, and you know that just wasn't it for me. You know, I want to build wealth from the ground up, not from negative, and I don't want to be owing banks or the government so much money. Just working for the government my entire life.
And so, how did you put yourself into that position?
Yeah. So back to the personal brand thing, I DM'd 25 to 50 portfolio managers, and Connor did as well. We kind of did it together. And what's funny was we didn't tell any of the PMs that we DM'd that we're like doing it together. And so through just like, you can call it luck or just putting yourself out there, not fearing rejection, which we did get rejected many times, or someone just doesn't respond. We landed with talking to Don Vandenborn, my boss at Revere Asset Management, and he's kind of just inspired that Connor and I both really had a deep understanding of the markets, and coincidentally, how we studied the markets. Will and O'Neill's CANSOM system, how to make money in stocks. It's all really inspired by him, this whole firm. And he just decided to take a chance on us. We were interns during our senior years as we finished college, as I finished my, medicine or pre-med degree in biology. And then Connor finished his Division I soccer.
Hey guys, before we get into this incredible episode, I want to say a massive thank you for all of your support so far on both Words of Wisdom and Chart Fanatics. We have grown immensely and are still the fastest growing channels in the trading industry. Now, a way to give back to every single one of you if you want profit.
Like the first year and a half, I developed like an edge in SPACs. I didn't know what technical analysis was, understand the general market cycles, risk management, position sizing. But like just intuitively, I noticed a pattern, and really markets are all pattern recognition. Almost everything in life, like science, is all pattern recognition. And I noticed this pattern in the SPAC life cycle back then, where you have all these shell companies, and the SPAC is special purpose acquisition company, and they're just out there floating around trying to find a company to bring public. It's just a quicker way for a company to go public, besides an IPO, which has a lot of regulations, fees, and SPACs. You can just go public quicker with less fees. A lot of those companies were frauds, but that's what happens. And I noticed this timeline where you have these companies and rumor hits, social media, CNBC, and you can start accumulating stock near the $10 net asset value level. And before SPAC merges, it doesn't really fall below 10 because if it doesn't merge with a company, all shareholders are paid back that $10. So somehow, just like some way, without even learning, I intuitively understood asymmetric leverage, or just having a cap downside but having that upside. We were all amateurs starting off, right? And the first trade idea that worked really well, and back then I was on TikTok, I dropped it quickly after I understood how addictive the algorithm was, but I found VTIQ. I'm not sure if you remember that name. And that was the SPAC that merged with Nikola, the fraud EV truck company. And at that point, I think I bought some shares around $18, and the definite agreement happened. It spiked to 32, didn't take any profits, didn't have sell rules, came all the way back to 18, but eventually I kept holding on, and it went to like 70, 80, 90. And again, intuitively, probably a little bit lucky at the time, I just sold all my shares around like 76 after a little bit of pullback. And that was really the first big trade that got me into it. And back then in 2020, with the Fed printing so much money, it was just like shooting fish in a barrel. There wasn't a lot of skill to it. And SPACs was the thing that was my main, trading vehicle strategy for the next 6 to 8 months. Some other ones like Tattooed Chef with FMCI. You had Chamath having his IPO A, IPO B, IPO C, just churning these SPACs. You want to do the whole letter of the alphabet. You know how that goes. Everyone knows how that story ended. But all respect for Chamath, though. I really enjoy Island Pod. But that aside, there's just a bunch. Same with Lucid. CCIV was another big one as well. And heading into 2021 February. That is when it all ended, and out
was
of
gonna
nowhere,
say, yeah.
lost the edge.
Mhm.
Did really well. Also suffered a big drawdown, and it's like a shock to you. Like what you had working just completely stopped working, so you had to step back. Huge drawdown, had to reevaluate everything. So
So what was that like for you? Like, what was your inner dialogue after having this easy run, if you will, this edge that's playing out?
like a lot of people would agree. You thought you're a genius, right?
Mhm.
You're up hundreds of percent in something you don't fully understand. You just got into as a kid in college. You're seeing all this money come in, and you're like, dang, I'm a genius. Like if you keep compounding this, I'll be at millions, maybe hundreds of millions. Of course, the market always teaches you the lesson that if you don't have risk management and a system, you're going to give it all back. And luckily, I didn't give it all back, but it was probably 50-60% plus. And that was the beginning of the story.
And what was the inner dialogue then, though? So you
Afterwards?
that peak high. What happens when you hit 50% drawdown?
I mean, that obviously hurt. You lost a lot of money, but I had the perspective like where I started. So I was still really happy. So I'm like, all right, I got a blessing here. I have this amount of capital. I really have to get serious and figure something real out. But I did kind of take a hiatus after that, at least for a few months, because that was when back to the dental path. That was when I was entering the summer after sophomore year. And that's when I had to study for the dental admissions test. So my full concentration and focus was on acing that test, which I did do very well on. And then after that, I got back into the markets. And the book that kind of introduced me and put me on the right path. I mean, some of your guests like Ariel, I'm good friends with, who you had on in the past, you probably cited this book too, How to Make Money in Stocks by William O'Neill. And after that, that really opened up the universe of kind of growth and momentum trading. That's how I label it. Read, Jesse Livermore's books, How to Trade in Stocks, Reminiscences of Stock Operator, obviously is a classic. It's a must read. The Market Wizard series by Jack Schwager. I know you've had him on the podcast as well. Mark Minervini's book.
It is a
Weinstein's
good book,
books.
right?
I've also,
Reminiscences.
learned from the Value Investors.
Reminiscences,
too,
whatever
but
the
I am a
fuck it's
growth-oriented momentum
pronounced.
trader, catalyst themes. But I've learned from Warren Buffett, Howard Marks, Charlie Munger. I just see wisdom in all these great investors and traders, and they all apply, regardless of what style you are.
Would you say having that break, even though it wasn't forced, but even though you had something else going on at the time, would you say that was quite helpful, given the fact that you had this drawdown? Because you hear about traders who have significant losses and then they try and make it back while they're still in that headspace. If they were just to take that step back or have that break, it allowed them to recalibrate, reset. So would you say that even though it was kind of interesting timing, we could say we can go back to that look, right?
Yeah, interesting timing.
Yeah, would you say that was actually quite helpful for you?
I mean, definitely, because like revenge trading is serious. You go on tilt and you just size. Like the worst thing you could possibly do is, if you're having a bad period, is to size up. And you like, it's kind of in our human psychology that we don't want to be wrong, and that's why you start sizing up. You force trades and you give back even more. And that's like one of the top rules, is to never size up when you're not doing well and getting bad feedback from the markets.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for time. To tell you, build access to the interesting same book said about the 20% off all challenges. Link is in the description below. Now let's go back to the episode. The interesting thing you said about these books, because as you mentioned, we've had Ariel on, we've had many stock traders on over the last year in particular, and a lot of them cite the same books over and over and over. Which is interesting to me, because when I have spoken to futures traders, forex traders, you don't really see that key theme. A lot of them have learned from other traders online, maybe it'll be YouTube videos, but you won't really see that essence of books, and especially like, again, the people online or YouTube videos are very recent, versus a lot of these books have been around for a very long time. How is it that you find that these same strategies and mindsets and principles, should I say, are still relevant to this day and yet still work?
Have you read How to Make Money in Stocks?
I haven't, no.
So pretty much what that book is, William O'Neill, he's featured in the first Market Wizard, so one of the best traders of of the last few generations. And what he did was he looked at all the biggest winning stocks of his time and of the past. And I think he started in the 1950s or something. And he looked at the characteristics of what created the big winners. And he found, and that's where canceling comes from. And just quickly what that acronym stands for, if you're not familiar with the How to Make Money in Stocks book, it's current earnings. So current earnings and revenues. And he looked for 25% year-over-year growth. Of course, the more sustainable that is, the better. A is annual earnings. Also, he slides in return on equity in there as well. N is new product, just something new. Hot narrative, hot theme, new product, new service, new management, some sort of some sort of uniqueness about the business. Cancel him. S is supply and demand. So price action, price and volume, looking at the charts, all the chart patterns that he talks about in there. And then L is leader or laggard. You want to trade the leading stocks, which is stocks, during a bear market correction that are showing relative strength, building the base, building higher lows, the relative strength lines heading to new highs. Those are the ones you want to focus on, because when the pressure of the market lifts off, those are the ones to make those big moves. I is institutional quality, or institutional ownership, sorry. And that's just like looking at how many funds own the company. If funds are accumulating and that number of ownership is increasing, well, you have institutional support. So price structure, price levels are more likely to be supported. And then M is the market, which is arguably the most important. You want to be trading these in a good general market, good market sentiment, because 75% of stocks follow the general market. So if you're fighting that wind, it's not going to really work out for you.
So you say by having that as a core principle, as a foundation, it allows you to just really have a focus on what works and what doesn't.
And back to you talking about how these principles have stood the test of time. Some of the best quotes, and I'm kind of paraphrasing from Livermore, from all the market wizards that we're familiar with and have studied. It's that, market participants change, the stock tickers change, companies change, but human psychology and supply and demand never change, because it's the laws of supply and demand, and human psychology is not going to change over 100, 150 years. We've been programmed through tens of thousands of years of evolution. And, being a biology major, evolutionary biology, it takes time for us to evolve. Maybe we will with, Neuralink and all these chips coming in the future. We'll see. Yeah.
So, going on from there then, and I paused you to really look at these books. So from there, what did that scale and journey look like, you know, when you started to identify these principles, learn these principles, you know, the implementation of that, was it as simple as it sounds, or did you have to really adjust to what you were doing before to this new way of looking at the markets?
It definitely takes a lot of introspection and reflection, but I'd say because I had that period of experience in the markets of not knowing what I was doing and just like being in the markets with real money, like experiencing the ups and downs, all the emotions, it's much easier to understand when you read the books and the principles that these guys are sharing about risk management, human psychology, position sizing, and just the overall awareness of the general market. So like no matter what, you can't, like just reading the books or taking courses, it's not going to work. Like you need to be in there, like in the arena, as many people say, like the Teddy Roosevelt, like man in the arena. Like you got to be in, experiencing the ups and downs and the drawdowns, as well as the successes as well.
What was your goal coming into trading? Normally, this is something that I end up asking later on, but it's quite interesting, I think, for you, because you know, came into the markets, had this really positive start, had this drawdown, built a different foundation, entered different markets. What was that like for you in terms of like your goal? Like, what did you have?
Like
a real big goal?
My goal for trading. Well, I guess we can go back to my childhood a little bit. And obviously, like all traders, portfolio managers, you want to make money, have financial freedom. But like the reason why it was so obvious to me that I had to get out of dental school was because Robert Greene, I'm not sure you're familiar with him. Robert Greene's an author, and he has this book called Mastery.
Yeah.
And I've listened to a lot of his podcasts on that book, and I still have to read it. But
I
he
like
talks
that
about
book.
finding that life task of yours. And one exercise he instructs you to do is look back at your childhood, look at what you're obsessed with, what your natural inclinations were. And when I did that, I played soccer or football from where you're from.
Yeah.
Real football. From 5 years old to like 18, 19. I decided not to play in college to focus on academics. But to me, sports is a game. I also was addicted to video games growing up too.
Right.
Call of Duty, Fortnite, FIFA. And for some reason, I resonate with anything that has this game-like environment. And that, some of those characteristics, competitiveness, there's winning, there's also losing. There's something to go after. I love winning, competing, beating someone out, and strategic thinking, all the characteristics you'd find in sports, video games, game theory, like how you and the other person are going to make decisions, like in sports and video games as well. So all of that, I see those applying to the markets, either, well, more so consciously now, but probably more intuitively back then.
Yeah.
And that's probably what drew me into the markets. And I would say for people that want to get into the markets, you really have to love it, because there's people out there that absolutely love it, and they're not just in there for the money, because you're going to have drawdowns, and if you don't love it, you're probably going to quit at the wrong time, right before the market turns out again. So you really just have to love the game. To me, the markets are one of the ultimate games in the world, that and entrepreneurship, and then life is really just a whole big game. So just enjoying it, and through all the ups and downs, you just really have to enjoy it.
So as part of that, do you have a goal with trading of where you were looking back then? I mean, like when it came to you scaling, did you have anything in mind?
Like, are you talking about like a dollar goal, or
not necessarily dollar, but more so like, did you think back then you wanted to be a professional, managing capital? Did you have any of these sort of notions, or was it literally just I want to learn how to trade?
When I first started, had no notions. I just enjoyed the game. But as I grew more and more, I got started getting inspired. Actually, I didn't talk about him, but a huge, I guess, indirect mentor of mine, Stanley Druckenmiller, and he's one of the most legendary hedge fund managers of all time. And just him, Buffett, all these great money managers drew me into the business, and so that's why I wanted to get into it, and that's
so
why I went for it.
Definitely, in terms of going from there to then putting yourself in this position, was there a difference in terms of managing your own capital to suddenly you're in this position where you're managing larger capital of other people's money?
Yeah, at least in our business, we're a registered investment advisor. We're SEC registered. Most of our clients are heading into retirement or in retirement. But with me and Connor coming on board, we've kind of brought in like the Gen Zs and like the younger millennials as well with our social media. But since we're not a hedge fund, we can't really use leverage. We are more restricted in shorting. Like we'll use inverse ETFs, but since a lot of accounts are like Roth IRAs, 401ks, there's no margin, so you can't short stocks like individual stocks. But now with all the inverse ETFs, we can short that way. This is what I say a lot. Managing your own capital, it's just you and your own emotions and zero money. But with clients, you also have to manage their emotions. So it's not only managing their capital, it's also managing their emotions. So you're juggling these two things at once. And you have to respond to emails. You have to kind of guide them through when they're fearful, when they're greedy, like why don't you have more exposure on, or why aren't you not heading to cash? You have to explain to them that process as well. So I'd say that's the biggest difference. At the same time, it's someone else's money. You don't want to do bad for other people. So there's that extra, layer of pressure as well.
What was the reality of when you first started to do that? Was there an added weight, an added pressure you had to overcome?
So our bosses, Don and Dan, they took a book out of William O'Neill. So for those not familiar with William O'Neill, like with his personal capital, once he grew a decent amount through his like Investors Business Daily business, he hired like 15 to 20 portfolio managers to manage his capital. And my bosses took the same page out. We didn't just get our hands on client money right away. Like that would not be responsible. We're SEC registered, so SEC's on us. You can't just be handing 22, 23-year-olds your capital with like absolutely like no backing.
Yeah.
So at first,
Yeah, I gotta brush my
we're just
teeth
trading our
real
own money
quick.
as part. part of the firm. You know, we have these daily calls. We have our morning call where we just like talk about the economic data, various news, what the future is up and down. We go through like, you know, upgrades and downgrades. We have the afternoon call as well. So we just brought our ideas, started slow, learned like the process of asset manager, the business, and just Don's whole process in general. But maybe 6 months into our time at Revere, full time at Revere, Don and Dan carved out a piece of their own money for us to manage.
Okay.
And so we each got our own tracking accounts, and we did pretty well for like 5-6 months. And so after that, they found trust. Not only do we know the knowledge, we could actually execute, manage risk, position size. And we started during the correction. This was late 2023. So it was in that 3-month correction before this, like, to me, the growth bull started late 2023. And then I started managing a little bit of my parents' money. You know, they put some money with the firm as well. So it started slow. Some of my good friends from college took a bet on me as well. So it's like, and then, you know, and my bosses were more willing for me to do my parents' money because my parents were some of my parents' money. And then my good friends, you know, they're fine with that as well. And just over time, more and more clients came in, and me and Connor, you know, through our social media, have brought in a lot of money as well for Revere, and that has also added on to the money we've managed to. And now we run a portfolio called TurboTection, and Don named that. We also have a portfolio called GrowTection, and we can get into that, you know, later after we go through like the whole background. Right now, clients who come in will just have like a smaller piece with us because we're more aggressive in nature, and then most of the money will be with Don. So it's like that traditional asset management. You know, we call it pie charts, where if you give money to a traditional asset manager or advisor, they'll have these model portfolios. They'll put you in mutual funds, maybe some stocks as well, and they'll just be hands off and just won't look at it. And maybe there's quarterly rebalancing at the new mutual funds, maybe there's annual rebalancing. But I guess our value add or our mission is to kind of show that timing the markets are possible, getting into cash when the markets weaken, and preventing those devastating 30 to 40, 50% drawdowns, especially for people heading into retirement who need that nest egg to live off of, and definitely people in retirement that solely live off the gains of their nest egg and they don't have income anymore.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top
Where's
of
the
it all. That's why
button?
tens of thousands of traders are
Where
subscribed
the
to
fuck
Market
is the
Journal, a free
button?
software that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or as UIN you got the flow. Now let's get back to this episode. So as a asset managers, like what is your focus in terms of performance? Do you have a benchmark that you're trying to achieve? Because I know recently, actually, on the podcast, we've had a few conversations, and even off the podcast with the guests that I've had, there were conversations in the room in terms of like, should we be trying to beat the S&P or the market in that sense, or should we just take what the market gives? Right. Like, what as asset managers, like, what is the focus? What is it that you're trying to achieve
so
per year?
GrowTection. So the GrowTection name, and my boss is really good with names, is to grow assets and uptrends, and then protect. So that's the GrowTection part. It's to protect assets and downtrends. And like what we talked about, GrowTection has probably 90% of the assets under management, and TurboTection, the portfolio Connor I manage, is about 10%. And so that's kind of how we balance that. So Grow is designed to match the S&P. Obviously, there's periods where we'll outperform it. There's periods maybe underperform a little bit, but match the S&P like returns, but with much lower drawdowns and much lower risk. And that's what we've proven, or that portfolio has proven over the last 5 to 6 years. It's done that. And Turbo, we started the portfolio early 2024, maybe like 6 months ish after our tracking counts that I talked about. And so, like, I acknowledge it is a young track record, and to me, it's not meaningful until it's at least 5 years, probably 10 years in the asset management space. That's probably when I think.
Why is that?
Like, just go through multiple cycles and a true bear market. Like, we survived the crash and we're actually short in the crash, but it was a V-shaped recovery. It wasn't a true bear market, maybe like 2022, but like really a true bear market.com, the 72, 73 one, the 2008 one. We need to survive one of those to truly prove that, there's actually skill in life.
Are you like itching for one to happen so you can prove it?
Yeah. Hell yeah. That'd be great. Like, having that under your belt, it's just a much better way to, sell yourself as a manager.
So would you say in terms of that side of things, is the goal to then beat the market?
Yeah. Oh, sorry. Yes. And Turbo's goal is to beat the market, and with that comes a little more volatility. Like we.
There's no point fucking doing it.
8%, but usually Don has like 5 to 6% position sizes, sometimes even smaller. But we'll have like 5 to 12.5. But 10 to 12.5 is safe for like our best opportunities.
Understood.
Yeah.
And therefore, there's no like target in mind. It's more so what the market provides you, but you're able to risk.
Yeah. So we're not forcing trades when there's nothing. When the market's not providing us. But like back to like how the dynamic works between GrowTection and TurboTection. Like, how I talk about pie charts where you come in and they put in different mutual funds. For us, we'll talk to the client, see what their goals are, especially their age, how much money they have, and we'll kind of decide like an allocation. Like, we'll put you, like, let's say Riz, you're 80 years old, you'll probably have 70, 80% GrowTection. Then let's say you understand the markets, a little more risk on, we'll put 20% in Turbo. But like some of my friends who are with me, they're just 100% in it. Or younger people, they're just 100% in it. They're willing to take more risk for potential more upside as well.
Yeah. And what sort of a time horizon are you guys looking at? Are you shorter term, or is it a mixture? We're
intermediate term trend followers. So I'd say our average hold for winter is probably at least a few weeks to multiple months. So we're trying to catch that swing move. We rarely get long-term capital gains, almost never actually. And yeah, so multiple months is probably actually a month to two is probably our average winner.
Got you.
So definitely not. We can't be scalping for clients. We can't be day trading even a few days in and out. Of course, if we really have to sell something, we'll sell it in the same day. Just managing the risk.
Mhm.
But we try to not have day trades for clients.
And are there particular sectors that you'll be focused on?
No, we'll trade everything. But actually, yes, we'll trade everything. Crypto, gold, silver, all those ETFs. We'll trade healthcare, everything. But primarily we're focused on growth-oriented names. And back to the CANSLIM acronym, we want stocks. I mean, the ideal stock is something that's growing double digits to triple digits, earnings, revenues. They have the return on equity. They have something new, unique about the business. And one thing I'm thinking about in the last 2 years is NVIDIA. That's a perfect CANSLIM name to me. I mean, we can talk about that later. But yeah, more growth. And then we'll also, William O'Neill's really strict about having the CANSLIM criteria, like very, very strict. We'll trade momentum as well, like crypto. There's no fundamentals. Like some people argue there are fundamentals, some people argue there aren't. But just for like traditional stakes, there's no earnings or revenues. But we'll still trade crypto. Like Bitcoin and MSTR was one of our biggest trades late 2024. Ethereum was a big trade this year too. So we'll trade like really anything that has a theme, catalyst, and I'll get to my own criteria later, building off William O'Neill's CANSLIM.
Yeah, just before we move on, then, in terms of that,
This guy's talking about trade ideas all the time on
right now
Twitter.
today, or this week, but like
All the
over recent
time.
months, we've seen all-time highs. We've seen a lot of individual stocks all-time highs,
Yeah.
and cryptos all-time
Yeah.
highs or close to. What do you do in those positions? How are you identifying opportunities when prices are already at these extremes?
When you're extremes, you like if you're not in already, you can't be chasing extended because the more something gets extended, the probabilities are that's going to be in revert, and so you want to get caught in that. There's no
True.
place to like manage risk properly, so
True.
you don't do anything if you're not in those positions. But building off the point of things were just an all-time highs, but we've started rolling over hard here, especially in the last few weeks.
Yeah, so again, not knowing exactly when this episode comes out, so right now we're on the 21st of
21st,
November.
yeah.
What are your
That's a while
feelings,
ago.
in terms of the markets? We've been having a lot of talks of an AI bubble.
Yeah.
We've had a lot of talks of being overbought, and we should see a correction. For years, we've talked. I haven't seen it actually, to be honest with you, for the last couple of years. But prior to that, we had years, probably from 2019 to 2022, 23. Personally, I would see, and I had the same thoughts because of the whole, sort of cycles of large corrections and sell-offs and recessions. There were calls for a recession for a long period of time, and we didn't have that. And you don't really see that now as much. We see the bubble aspect. Like, as someone who's really at a more professional level and is looking at the markets on more of a macro view, I'd say as well. What are your personal sort of feelings, not in terms of predictions, but how do you feel about the markets?
Yeah, about predictions, like as traders, we don't predict. We kind of take in the information, then react and position ourselves accordingly. But my view on the market right now, we've had this really amazing run since the 2022 bear, and I'd say maybe we started this bull market around 2023, early 2023. And you've had NVIDIA go up like 1,000% plus, maybe 2,000%. You've had all these stocks with no earnings and sales like Oklo, LEU, SMR, all these quantum names go up thousands of percents. And I don't want to be here labeling a bubble or not. Obviously, there's some bubble signs. There's a lot of new market participants. Valuations are extended a little bit. You have this revolutionary technology, and with every new technology, if you look back in history, railroads, which was a bubble at one point, tech stocks, software, cloud, all these new technologies, just human nature-wise, leads to at least some sort of bubble, and the size of that bubble will vary depending on how great the technology is and if there's actual fundamental backing to it. But there are signs of a bubble with every new technology because there's just exuberance for the technology, and the sentiment on the technology will move far faster than the development of technology itself. Yes. So we think AI is much better than it is, and there's a lot of experts coming out talking about it's not even quite there yet. It's not nearly as good as what we think, especially matching human intelligence. Like there's this whole rave about AI agents. Like as far as I'm aware, and I followed like Andrej Karpathy, he's one of the leading thought leaders there. He talks about how agents aren't matching human intelligence. They can't replace a human knowledge worker at all right now. So he thinks at least 5 to 10 years before agents will fully be developed. We'll see what happens with robotics.
That is
I'm not seeing any evidence
fucking
of
fried.
humanoid robots at least.
That is not
Completely replacing
true.
humans. Obviously, like there's industrial logistic robots. The whole supply chain of Tesla is almost managed by robots, but it's nothing like what these leaders are portraying as of now. And yes, there has been this hype, and there's a lot of money flowing around, and a lot of spending and capital expenditure.
No,
from all these companies building this
the
out.
funny thing
But yeah,
about that is that, like, whatever, that statement, this was recorded in November, he said, and even then that statement was wrong. But like the difference from November to now in terms of like where the AI models are is like quite ridiculous, right? These things are like new models, like new updated models are coming out like on a monthly basis, and like the gaps between them are getting like pretty
ROI,
significant.
investment into actual company earnings and revenues. That's still to be seen. And I
Like
wanna make
the
predictions,
new
especially since I'm not-
codex for ChatGPT, the model helped code it, so like they're becoming like self-recursive at this point too.
absolute expert in AI.
Of course, no, of course. And it's so interesting because it feels like everyone, or a lot of people seem to be an expert, and then that's probably another element of a bubble.
Yeah, exactly.
But people hear bubble, and I think they instantly think something negative. But
No.
to your point, I think is at the end of the day, it's one of the nature of things.
You don't want to see a bubble as a negative. As traders, honestly, like as George Soros says, you love bubbles. And he has a funny quote. He says, when I identify a bubble, I want to add more fuel to the bubble of buying it. Because during bubbles, you'll have the fastest and biggest moves. I mean, as traders, that's what you want. You don't want a sideways choppy bubble that goes nowhere. Yeah. So you want that. I mean, you just want to be aware of your own psychology too, and the general sentiment of other participants in the markets. You don't want to get caught in the bubble popping. But the thing with bubbles is, study history, they can last much longer than you actually think. even when you start identifying the signs of a bubble, that doesn't mean the bubble's just going to pop. You need some sort of catalyst. Usually that's an uptick in inflation, and then the Fed starts restricting their policy. And right now it's the opposite. The Fed is easing their policy. So at least the Fed is not going to be the one that pricks the bubble. And right now, we're probably around 5% off highs in S&P 500, Nasdaq's a little bit more. And during bull markets, garden variety pullbacks, corrections are perfectly normal. 10, 5, 10, 15% pullbacks. Yeah, they're healthy too, to rinse out the excess. Like in the month of September, you had quantum stocks go up 100 to 200%. People were making money everywhere. Saw so many P&L posts on X as well, flashing that. It's never a good time when you see that. A lot of friends text me about that they're in quantum names too, but they really don't know too much about the markets. And so you just started seeing a lot of irrational exuberance, all these companies with no earnings and sales just flying, all these rare earth themes flying one by one. And so far, reality has set in. A lot of these companies, a lot of air has come out of them, 40, 50% pullbacks in these, or I guess you can call it corrections, not just a regular pullback. So overall, markets is still pretty healthy from a longer term perspective, but short intermediate term, for us at Revere, we're definitely seeing this as a healthy pullback correction. And, NVIDIA did have, so some of the more recent signs that this market could be a little unhealthy is that NVIDIA had a great earnings beat, double beat on earnings and revenues. They guided up. Jensen said all the cloud GPUs are completely sold out. There's so much demand for the Blackwell chips as well. He talked about, this robotics revolution just starting. It's a multi-billion-dollar industry right now with a multi-trillion-dollar opportunity, and just all these great comments. And what happened? You gapped up. This was yesterday. You gapped up. Opens equals high on NVIDIA almost by 5 cents. And what that means is the opening price was almost just a high price. And when you have a true opens equals high, it's a very bear signal because it just means instantly sellers came in. There's absolutely no buyers on the day. And you gapped up, and literally like the worst possible scenario, in my opinion, happened yesterday, where you have amazing news and you completely close at the lows. This is what's called like a bearish engulfing candle, where you completely take out. So you gap up, you take out the highs and lows of the previous candle, and we slice like 3-4 moving averages and close at the dead low. So horrible sign. The Nasdaq did that. The S&P did that. So many other AI names did that, like BE, Irene, Palantir. So it just wasn't a good sign yesterday. Today, we bounced back, but that doesn't repair the damage from that kind of like blow to the markets yesterday, and as well as October 10th too.
One question that I'd love to ask, especially in your guys' position, being sort of that more, 1 to 2 month average hold time, and you're looking for those stocks that are breaking out and starting to see that momentum. And it's been a theme, and I've realized it's actually something that's probably one of the hardest things in trading, which is in terms of knowing how to get out. Especially when you're considering potentially stocks that are heading into all-time high territory. Is there a thesis that you maybe personally or as a asset managers have when it comes to knowing when to get out or how to get out?
Yeah. So actually, going back to the portfolios, over time, Don has implemented an index strategy, especially as we scaled, and like 40, 50%, 6%, no, about 40, 50% are in S&P or leveraged S&P to smooth out the volatility of the portfolio. S&P has like all these different sectors. So sometimes there's rotation out of growth, but the S&P will still hold up because there's rotation to value or more defensive names like healthcare, energy, something like that. So that is like a core part of the portfolio. Both portfolios is that core S&P portion, but then with the rest, that's where we're operating the more high beta growth stocks. And from our perspective, we like talking about how you get out. If you watch our daily videos, we have a trend gauge, and there's a short-term trend, medium-term trend, and long-term trend. And for the short-term, we're looking at the 21 exponential moving average. Medium-term trend, primarily look at the 50-day moving average, and then long-term trend, that's like the big 200-day moving average that we're all familiar with. And then again, part of the trend gauge is also the market leaders. So we're assessing the health and breadth of the market leaders, how full our watch lists are, the actions, but if those leaders or the stocks on our watch list are acting normal or abnormal. And so from the market leaders, short-term trend, medium-term trend, long-term trend, that's kind of how we get an overall assessment of the markets. To get more granular into like how we get out, there's selling to strength, and there's first off, there's stopping out. So you get into position, you have you know your stop before you get into position, you size that properly. So you're risking what you're willing to risk of the total portfolio. If that stop hits, you go out. But once you're in profit, then you're thinking about, okay, how do I protect the principal? So you can raise your stop to break even once maybe you're up multiples of your risk, or some people have like a 25 to 30% gain, then they'll start raising their stops or taking some profits. But in terms of selling the strength, we'll look at ATR extensions above the 21 EMA and the 50-day, and usually 3 to 4 ATRs above the 21. You can visibly see like there's a huge gap between price and the 21. We'll trim pieces off, or you have 8 to 10 ATRs above the 50. We'll trim some pieces off too. And also William Neal's book, he has some characteristics of climax runs, and we saw that in names like SMCI in early 2024. We had that MSTR as well, and recently we probably had some of those in some of those rare earth names as well as the quantum names. And some of those characteristics, what we look for is, after extended move out of a base, and I'm sure your audience understands the base.
What was the number?
Here, so out of a base, 21, we'll trim it. But in terms of selling the strength, we'll look at ATR extensions above the 21 EMA and the 50-day, and usually 3 to 4 ATRs above the 21. You can visibly see like there's a huge gap between price and the 21. We'll trim pieces off, or you have 8 to 10 ATRs above the 50. We'll trim some pieces off too. And also William Neal's book, he has some characteristics of climax runs, and we saw that in names like SMCI in early 2024. We had that MSTR as well, and recently we probably had some of those in some of those rare earth names as well as the quantum names. And some of those characteristics, what we look for is, after extended move out of a base, and I'm sure your audience understands the base because everyone's traders here. So out of a base, you're 6, 8, 12 weeks out of the base, and you start to names.
Gotta slow this down right now.
After extended move out of a base, and I'm sure your audience understands that MSTR as well, and some pieces off too. And also William Neal's book, he has some characteristics of climax runs, and we saw that in names like SMCI in early 2024. We had that MSTR as well, and recently we probably had some of those in some of those rare earth names as well as the quantum names. And some of those characteristics, what we look for is, after extended move out of a base, and I'm sure your audience understands the base because everyone's traders here. So out of a base, you're 6, 8, 12 weeks out of the base, and you start to see the rate of change of that stock accelerate. And I say, like, when a stock's starting to head in a 12 o'clock direction after a big move, that's when you have to start watching out. And some characteristics to help us sell more into strength is multiple gap ups in a row, many green days in a row, like 7 out of 8 days are green, 8 out of 10 days are green. You have the largest daily candle, also on the largest daily volume. That just shows capitulation to the upside. So, people who have missed the stock are like, screw it, I'm going to just buy. And that's when you have like highest volume ever after extended move. To me, is not bullish. It's a sign of potentially a climax top forming. Highest volume ever out of a base is very bullish. It means institutions are gobbling up the stock.
But then buying high is kind of the opposite.
Yeah, exactly. And so, some of those characteristics help us sell into strength. But then one of the sayings we say is like, always trail a piece and sell into weakness, because you never know how high a stock's going to go. And so the 8 and 21 EMAs are the primary 2 moving averages we'll look at. Almost always we're out of most of our stock on the break of the 21 EMA. A close below. We'll trail it with the 21 EMA. And then for something that really has a good fundamental story, and really like a true institutional quality name, we'll maybe trail some with the 50-day moving average or 10-week. But once the 50-day breaks, we're pretty much completely out of the stock. But you'd be surprised, the 10-week can keep you in some names for 6 months to a year. So yeah, those are some like selling the strength as well as weakness to balance that.
You'll see a lot of traders who, especially in crypto, but even in stocks, no doubt, it's just the human psychology of it, where they will have a price target rather than based on like how the momentum's fading or the volume or, trailing at least or trimming. You see it like with crypto, for example. Remember when it went to 69,000, the last cycle,
right? Yeah.
Everyone was probably waiting for 100, right? Yeah. Or, this cycle, they might be waiting for 250 and, we've struggled to break above. Has there been a benefit of being in the environment that you're in as part of this, asset management environment? Has that been something that's been beneficial to you? And has there been a lot of benefits that you've been able to implement into your trading that you may have not been doing prior?
Well, so in terms of price targets, we don't believe in doing price targets because that means inherently that means you know where the market's going to go. And kind of like none of us know where the market's going to go. The only times we'll give like quote unquote price targets is like if we're buying a bottoming base, like after a stock or crypto or ETF has made a substantial downtrend, it forms a base. I call it stage 1 base. If you study the Weinstein 4 stages, stage 1 base, you break out into new uptrend, you might have previous resistance levels. So instead of price targets, it's more like having logical potential areas when the stock might pause. So maybe it will trim into those resistance levels, but to me, that's not a price target, not like assigning arbitrary price target to
the name. Trying to make time high.
In classical charting, there's a concept called the measured move. And I'm not getting into details of how to do measure move, but measure move is just a way to like potentially set a price target to see like how. So markets like to move in symmetry. Yeah. Like if you have a first leg of a base, oftentimes the second leg is quite identical to the first leg. So you can set quote unquote price targets in that way, or we call it more expectations. Like this could potentially move here. If it does, that'd probably be a reasonable spot to take some off into strength, because the probabilities are you might have to withstand a pullback, and we want to smooth out the volatility and equity curve, as much as possible to just trim a piece into strength.
One thing you have mentioned a couple of times so far in the podcast is in terms of if we look at history, right? If we look at what's happened in the past.
Yeah.
How important is that, for traders who are trading today to be able to study what's happened in past bubbles, past crashes, even in past themes that performed well?
Well, I think it's so important to study history and what past big winners have done, past market cycles. You don't have to it depends on what style you are too. Like you don't have to study the macro, like all the details of what the government was doing, like what inflation growth is doing. Maybe that's your style. Then obviously it's really important.
Don't agree with that, right? That's like contextual information matters a lot. I wouldn't just go blindly ignoring that.
Momentum trading, you probably don't need any of that stuff. It's more noise than signal. So you just want to study the best winners in that style, and just know the characteristics. Because, like I said, even earlier on the podcast, the laws of supply and demand don't change. The laws of human psychology don't change, and that's what creates market cycles. Is those two laws of supply and demand and human psychology. And you have like hope, fear, and greed, euphoria, depression, and all of that creates the ups and downs of economic cycles, business cycles, even political cycles, and of course market cycles too.
One thing you mentioned as well as being part of the asset management group is that you have calls, right? You have calls in the morning, calls in the afternoon. What's that like being in this infrastructure, if you will, in this team environment versus just trading alone, or I guess with Connor at some point before starting? But like, what's the difference there? What are the key benefits that you're getting from doing that?
Well, like I talk about when I was a child playing video games and playing team sport, having that camaraderie, like you have a sense of mission. Like you guys are all fighting to build this company, or everyone on the team is trying to win the championship together, or you're playing Call of Duty with 3 other people, you're trying to win this match. So having the team calls, all of us have blind spots.
Interesting that he said 3 people. That means that this guy was not playing Call of Duty pubs. Interesting. I know this guy played like any kind of competitive god.
People analyzing the markets. If 2 people, and Ray Dalio says this too, it's a principle I've learned from him. If 2 people are complete in disagreement, but both people are intelligent and knowledgeable, you really got to figure out like what's going on. Like, why aren't you aligned? Both people give their sides of the story, and you want to try to be as open-minded as possible, which is a really key characteristic of someone in the market. You got to be open-minded, flexible, adaptable. And I think that check on each other is really important in the team setting and just being together. Even in downtrends, you all are going through chop, all downtrends. You can bring each other up. And I just think it's great to have a team. Even if you're an individual trader, find 2, 3, 5, 10 people who trade similarly to you, form a Discord chat or iMessage chat, and just have that pod with you. And you can learn from them as well and strengths and weaknesses. And it's just like you build each other up. You compound on each other's knowledge.
What would you say the best
You
method?
know, the other thing about that's nice, which is like one of my reasons I like X. It's like crowdsourcing ideas, right? Like at the end of the day, you can only look at so much. So having like an extra set of eyes to kind of keep you in the know of some things you might not be seeing. Like this Colgate thing, for example, right? This trade was from X. Like this just setup forming here was from fucking X, and like this thing they ended up doing. And there's like multiple examples of this.
Of creating their own trading pod would be in today's trading world?
Well, first you have to understand what style you have and your own goals, and then finding the people. Social media helps a lot. Honestly, like just taking a chance and joining other communities and seeing if it fits you. If it doesn't, you can just always leave. But if you do, then you can DM people. Don't be afraid to DM people. That's how I got this job in the first place. And yeah, just see it like if personalities match, how aligned your trading styles with each other. And once you know what you want and what your trading style is, it's not hard to form a trading pod or find traders that think like you or trade like you.
One thing I find fascinating from your X profile is the amount of information that you're able to decipher and learn, I would say relatively quickly, because you'll give a feedback on something that's happened in the market. I wouldn't say immediately, but very close to that. And you're able to give really detailed write-ups of, what this means or what you expect or why that's taken place. Is that a skill set you've always had? What resources are you utilizing to sort of have this level of insight or information?
Now, my experiences in college, like doing that biology degree, obviously like it doesn't apply directly to my work, but what that experience or college 4 years did teach me, studying biochemistry, studying the biologies, chemistries, the organic chemistry, physics, is it taught me how to learn. And I think that's one of the most important skills like in life is learning how to learn first before you even do any learning. And traditional school, they never taught you how to learn. And I could go off tangent a little bit if that's fine, but of course, like back to the dental admissions test, what I did before I even started studying for the test is I read a book called Make It Stick, The Science of Successful Learning. And I read that first and try to master principles and apply the principles to my studying. And honestly, like I credit that book on all my success in that exam. So I wouldn't say I naturally had the ability to learn. We have to learn how to learn. And, part of that, over time you kind of develop the skills. It's more intuitive. So I can't fully explain like how to synthesize all information, but some of the principles is just try to make connections between pieces of information. AI does help a lot now too. Like if I want to search something up and understand something, I'll ask AI. Perplexity is one of my favorite. ChatGPT, Gemini, all of them work well. Grok. So definitely use AI if you don't. It's one of the best tools for learning now besides research. So I'd say, I've read a lot of books too. I've learned from people that have come before me. I think that's a really important part. But then you just have to be perpetually curious and always have a thirst for information and hunger for knowledge.
Learning how to learn.
Yeah.
What are some principles that people can really implement?
I've ranted about this so many times, like my college years, to my friends. But one like so a big, I guess, mistake people do when they're learning is that, at least I'm talking academic and as well as regulars, like you have a PowerPoint, you have notes, and you just read. That's the worst way to learn. Like you get the sense that you're becoming familiar with the information knowledge, but it's not actually going to your brain when you're just rereading. So the main principle taught is active retrieval, which is yourself testing yourself. So let's say you read a page or a chapter, you sit there and you ask yourself, what did I learn? Summarize it in your own words to yourself, or even better, teach it to your girlfriend or your family. Or
right, we talked about this, right? Teaching somebody else is the number one fucking way.
It's
number
putting
one
this information out there. When you write, you're synthesizing, you're working on your clarity of thought, synthesizing all the information so it's presentable to other people who follow you. And I guess social media is, like your likes, your followers is an indicator of how well you're able to curate your thoughts and put it out there. But going back to like principles of learning, the next one is just spacing it out over time. There's the forgetting curve. You're familiar with that? Like our brains are naturally designed to forget stuff. Like if you people want a photographic memory, but people who actually have it, they suffer because when you live in the past, when you remember everything, you don't want to remember everything. You don't remember the bad stuff that's happened.
Of course, yeah.
And so naturally our brains filter stuff out for the stuff that's relevant to your life or emotionally charged, that's like meaningful to you. And to like force yourself to learn something, you just want to space out over time. Like you study one thing this day, you study again tomorrow, maybe space out another 7 days, and then review it in 2 weeks, and then a month. And that's obviously the formula I followed for the dental admissions test for all the subjects. And that's really how you lock it in. You want to teach. Teaching is the best way to learn.
Is that some like hard test or something?
And just really
dental admissions
with the material, the more you can assimilate it into your knowledge.
To that point, in terms of more time, do you believe there's any shortcuts to trading, and the trading journey?
No, there's absolutely no shortcuts. Like the people that have the wrong expectations or inflated expectations coming in thinking after a year you're going to have mastery, they're going to be in they're definitely in a like getting themselves into disappointment. Because if you think about it, to have mastery on anything, it's at least going to take you 5 to 10 years. Like you didn't just start this podcast and become a great interviewer or listener. It took you time. You probably iterated over and over again. Your first podcast is probably nowhere close to your 100th, or you probably have close to 1,000 now, something like that, or hundreds at least. So it takes time to build.
Not
mastery
even
in anything.
close.
And yeah, it's going to take time, trial and error, failing. You have to have a persistent, resilient nature to succeed in almost anything, because there's going to be failure
What the
along the way.
hell?
And as long as you see
Not
your
all
mistakes,
interviews
failures, and
are,
setbacks
they?
as an opportunity to learn, and you learn something out of it, you want to be able to just move on from it, take the lessons, and then focus on the present, and then plan for the future.
One thing I find fascinating about trading is that there's so many layers to it.
Yeah.
There's your risk, there's
Yeah.
your entry, there's your stop, your exit, there's the psychological aspect,
Yeah.
there's your strategy,
Yeah.
and there's all these different layers. Did you, during your own journey and sort of sharpening your tool set to get to where you are today, did you, through that process, were you learning all of these things at once, or did you actually focus on individualizing these skill sets?
I think most people get into it. They just think if you know how to read a chart, you're probably gonna be a good trader. And that's kind of what I thought at first. I put so much emphasis in learning technical analysis, analyzing chart patterns. And that's really just layer one, like you talked about. The most important layer is actually the risk management. And that comes with position sizing, progressive exposure. So I know Ariel definitely talked about that, which is like when you're doing well, you want to step up your exposure, number of positions, overall position sizing, how much you're risking, your overall exposure, maybe getting to margin. But as you're starting to see some waning action, you're starting to take some losses, you want to start pulling back a little bit on your initial risk, your trading frequency, aggressiveness. And like how you talked about it, I didn't
I
purposely.
mean, honestly, when that other guy mentioned the same thing, like I don't agree, right? Like I don't like. I suppose it's a bit subjective, right? Because these people all do the same fucking thing. They're all just trading breakouts of bases and then just trying to ride the trend. So I suppose if that's all you're doing and nothing is breaking out successfully, then yeah, I guess fine, fair enough. But like in the ideal world, you're like sizing based on the quality of the setup. It doesn't fucking matter what your last trade did, right?
Learn in layers. But a lot of books and courses will like teach you the specific parts of the training process. But like over time, yes, it like just naturally I had to learn things in layers. And it was probably charting first, and then I really understood how important the position sizing and risk management is. And even now, I think the most important thing is being able to identify the market environment that your strategy actually has an edge in. Because not all strategies will never work 100% of the time, but there's that period of time where your strategy is in favor, and that's when you want to push the
True.
gas, and that's when you want to actually do most of your trading.
What process do you go through in order to identify those moments at the right time? Because it's easier, I would say, to identify once it's already happened and you say, oh, wow, I've just performed really well. But by that point, a lot of the time, if you haven't been mindful of it or use certain indications to pick it up early, you've kind of missed the boat. And then if you start to size up or get a bit more aggressive to maximize, you might find yourself on the tail end of that curve, which a lot of people then make that mistake and then end up having heavier losses, right? Give it back.
Right.
So how is there a process of trying to identify early that we're in a good market condition here, or strategy is really going to...
For our strategy and system, the best time to start going long is after a pullback correction, and even better after a bear market. Like things have reset, sentiment has reset, and that's when you start looking for stocks that are resisting the downtrend in the market.
So signs of life, right? Signs of strength.
High, stocks building higher lows. You're having the symmetry of the base building the right side, starting to come up the right side. So once the general market starts stabilizing a little bit, you're always looking for relative strength names during a downtrend. And
what is going on over here, right? It's like a massive iceberg order. Things have been sitting here pixel perfect at this level. Someone's got a big ass order up there. It's been like damn near 30 minutes now. God damn.
When we start getting above like the 21 EMA, that's like when things are like quote unquote game on. We'll use a bunch of other secondary indicators, but 21 EMA, above the 50, above the 200 is our
What
best.
time frame would you use, when looking at the 21 EMA and
The daily, weekly charts. Those are our main focus. And so the absolute best environment is where like the 21 is stacked over the 50, stacked over the 200, and then prices above the 21 with an abundance of stocks breaking out of bases, bunch of themes. Like the environments where like your watch lists are full, it's so hard to choose a focus list, and everyone's trading different names is the best environments. When everyone's focused on like one name and you're banging your head, frustrated, you're getting chopped up, it's like that's probably when the environment's starting to get poor. So listening to your own portfolio feedback is probably the most important thing for identifying if your edge is in favor or not. Because if your edge is in favor, you shouldn't be struggling that much. Like losses will happen. Like we're probably batting like 35-40%ish. Don's probably a little higher, but like you can kind of feel where you start taking more losses, that win rate starts dropping, and you're just not making traction in general. And at the time, you're probably seeing like indexes rolling over, breaking the 21 EMA. You're seeing wider range candles. The VIX is getting over 20. Just a lot more sloppiness, volatility. Because for us trend followers, like low volatility uptrends is where the best trends happen, and the VIX is usually 12 to 15 range. Daily candles on S&P, like ATR wise, is well below 1%. Like right now, the ATR at S&P today closed at 1.3%. So it's absolutely normal to see just 1.3% swings in S&P. And when you're having that, individual high beta names are swinging 5, 10, 15% in a day. So, and that's not conducive for finding low risk entries and low volatility trend trading.
So with this sell-off, before we move on to some other topics, with this sell-off that we've seen, this week, does that based on the EMAs, etc., is that looking likely that you could have some opportunities presenting themselves if prices can start to build a base?
Right now, like setups are almost non-existent for us.
Mm.
Like after this pullback, like so many stocks are off 40-50%, completely have collapsed. And when you have this big of a shot on stocks, it's like the analogy I think of is like if you break your leg, you're not just going to recover in a day or a week. It's going to take at least a couple months, and that's kind of what we're seeing here. We just need more multi-month bases where you have, and to me, a base is a stock has gone through the proper supply demand dynamics of
Like
strong
sort of range.
yeah, of like institutions, funds accumulating. You know, when they're bullish in name, it takes some time to accumulate when they want to put in billions of dollars. So when they're accumulating, weak hands are selling. That's why bases are carved. And part of the basing is psychology. You know, people get impatient. People are holding losses from the top, so they finally capitulate. Strong hands institutions take it off of them, and that's what carves like the rounded base, builds up the right side, and eventually break out when there's more demand than supply from the institutions. And we're not seeing any of that right now.
So you
Nvidia
wouldn't take an opportunity like with this aggressive sell-off. Let's say we have another one next week.
Yeah.
As an example, random example, another one next week, and then we see a complete V-shaped recovery. That's not something you'd probably be looking at based on the fact that we haven't had that sort of base.
typically we're not mean reversion traders. We like to see that volatility come down. And right now we're well below the 21 EMA. We're below the 50-day. We're flirting with the 100-day moving average right now. We held today, but we'll see. It's just to us right now potential counter trend rally. But the 821 are both below the 50. That's just a very negative sign for us. And we haven't. So this week we broke the 50-day moving average on the S&P for one of the longest periods in history. We were 136 days above the 50-day, and finally broke below that. And now the 21.8 are crossing below 50. And from a trend following perspective, traders who use moving averages, that's just never a good sign. It's like there's times to be in the market to grow, like protection. There's times to grow assets, and there's times to protect. And since really last week into this week, we've entered the protection mode significantly. Like we've reduced exposure a lot. And yeah, just like looking at our protection gauge, if you've seen our videos, market leaders have been changed to red, short terms on red, medium terms on red. And the only part of the gauge that's green is the long term. We're still well above the 200-day moving averages for the major indexes. So that's still intact. But if we start breaking the 200, like that's like for us, we'll go completely into cash or maybe even short. And that's probably where we separate ourselves from other traditional registered investment advisors or advisors at Merrill Lynch or Goldman or Morgan Stanley, where they're not going to sell because they'll preach the buy and hold. You know, you have time, the markets will always come back. And that's kind of how we separate ourselves, differentiate ourselves from that industry. And we're really trying to disrupt that area. That's why we put out content too, to educate people who have been through a 30, 40, 50% drawdown with those guys. And that's a lot of our clients who've come over from those firms. We just think we found a better way, and we can get into like what inspired Don and Dan to get into what they've built so far, and then where we are now.
Let's park that for 1 second.
Okay.
because
I
one
was like,
question I
the
had was
other
in
thing
regards
about
to-
that, like, the people that have that mindset of like hodl, just fucking buy and hold, whatever, right? If you're looking the index, okay, sure, maybe. You still have the risk of having some like prolonged bear market. But if you're doing that with like individual like equities, super risky, right? Because if the indexes do go into like a prolonged bear market, some of that shit is not going to recover, right? It's not simple just saying, yeah, buy and hold, and it's going to get back to the all-time high eventually, even if it's like 3, 4, 5 years. It's not the fucking case. A lot can change in that time.
Why is it so important? As you said, you're not mean reversion. You know,
Yeah.
it's like your style. Why is it so important, regardless of being asset managers or just individual traders, to really identify your strength or your strategy and stick to that? Versus you've probably seen it, but a lot of people try and do every play, right? Long, short, range bound.
If you're doing everything, you're probably gonna get all these strategies twisted because the principles of trend following is definitely completely different than principles of shorting and mean reversion. And so you won't get a good feel and intuitive feel of like when your edge is in favor or not. Really focus on the downside protection for our clients.
No, but in regards to like mixing strategies, you know,
mixing strategy.
You know, mean reversion, range
you
bound.
can't do everything because if you do everything under the sun, you're gonna be a master at none. I think it's like the jack of all trades and the master of none. So we want to focus on our own niche. We know when our strategy is in favor, out of favor. If you're trading everything, you're just doing everything all at once. You never master anything. You don't specialize anything. And one day you're 1 month you're a trend follower, that stops working, go to mean reversion. But at the time you go to mean reversion, trend following starts working again. So if you don't consistently implement an approach with discipline, you're just gonna have results all over the place. And
I mean, that's just not true, right? Like, not true. it's you can do them. It's about knowing when to do it, right? If something is like trending and there's no signs of any kind of overextension, potential mean reversion, you're not going to be trying to take a mean reversion trade there. And if something's having like a fucking blow off top, you're not going to be trying to take a trend following setup there. That's where you try to get the mean reversion.
Or even indirect mentors like Drucker Miller, Christian Quallen McGee, even Lance as well, who's on the podcast. They all talk about you want to have consistent inputs with discipline so you can have those consistent outputs. And you actually know that if you like, for example, if you have consistent inputs and your results are bad, at least you have consistent inputs and you have something to base, your reflection and review off of.
Yeah.
If there's all random everywhere, your mistakes is randomness. So you got to fix the randomness first before you can have that feedback loop of, improving your process. If that's what you're looking for, you want to have consistent inputs.
I think there's like a limit on our cognitive ability, no matter how good you are.
Exactly.
Right. And no matter how smart
Unless
you
you're Elon Musk.
Well, yeah, exactly. That's true. That's true.
Like I
Especially maybe when Neuralink comes and it might open up some possibilities. But yeah, like the cognitive ability to be able to switch perception and mindset based on what strategy. As to your point, whilst you're looking at mean reversion, the reality of you being able to see a trend following strategy is very simple because you're focused on one aspect, right? But going back to, as you were saying, like what is the inspiration and mindset, when it comes to Revere?
Yeah. So Revere, like what we talked about, the value add is the focus on the downside protection. Really, like our drawdowns are much, much less than S&P. So during COVID crash, we drew down max 13, 14%. Inflation bear drew down max 13, 14%. And then this terror crash was like 8% drawdown in growth protection. So less than 40% or even 30% of the drawdown of the S&P 500. And for our clients in retirement, it really helps them sleep at night. But really to back it up, for Don, he had a father-in-law in that 2000 dot-com crash. And that's when he got in the markets, he made a lot of money, gave it back too. So that put him on a journey of, like, he knew there had to be a better way. But more importantly, his father-in-law had cancer at the time. And Morgan Stanley, like, he experienced like a 50% drawdown while having cancer. And, just that kind of blow up while you're paying the bills for your healthcare, that didn't sit well with Don. So he went on this huge journey of trying to find a better way. In his mind, there definitely was a better way. And he was inspired by William O'Neill and went to a lot of those workshops, in-person workshops, that book as well. And for Dan, who is the founder of the firm, Don eventually joined, and now they're 50-50 partners. But Dan has been in the business for like 3 decades plus now. He has the CFA, that's a very distinguished accreditation, as well as CPA. So he knows all the financial analysis, the fundamentals, the econ stuff. But he himself also learned over time being in the business that you need downside protection, because oftentimes, the fundamentals look the best at the top. If you don't have that sell rules, these growth stocks can drop 75% plus. Like there's a rule from intermediaries, like there's, after a market leader has made its run, during the bear market, there's a 50% probability of 80% correction and an 80% probability of 50% correction. And no stock is excluded from that rule. Tesla's down 75, 80% in 2022. And that was the darling of 2020, 2021. But back to like the story of Revere, Don developed this process over the last 2 decades. First trading his personal money, but then Don and Dan also met on social media. So it's kind of funny.
Oh, really?
We all just met on social media.
It shows you the power. People are using it wrong,
Yeah,
for the most part.
Dan brought him in. They started up the shop probably close to 10 years ago. That's when Don joined. And they grew it from like 10 to 15 million to 100, and then Connor and I joined on board this train, and we built it to the 400 now. But like our mission is very focused on the downside protection, risk management, but also capturing the upside. Clients need to live off their retirement.
Well, outside of just sorry to interrupt you, but outside of just the the drawdown amount, right? Having to stomach the 40-50%, is there actually a benefit the fact that because you haven't taken that hit, you actually have a much stronger base to have a continued growth?
That's how compounding works, right? Like if you prevent the drawdowns, you're compounding from a higher capital base versus, everyone has seen like the drawdown charts, like a 10% drawdown, it takes 11% to get back.
Exactly,
20% is 25, 50 is 100, 90% is like 900%. So the more you take losses, it's gonna be harder and harder to make that back. And especially just for our clients and for compounding our own assets under management, if we draw down much less, we can compound, especially as that market turns, those leaders are setting up, and we can just compound a higher capital base.
Plus, you got more juice, right? You got more cash to buy the motherfucking
dip. If anything, like are there certain like minimum amounts of capital necessary?
We could totally leave this in. That's completely we can share that. It's 100,000 per strategy right now. And so growth protection is getting close to that 400 million mark. So we're actually closing down that portfolio once we have 400 million, and then we're opening up another portfolio that trades even larger stocks. So we want to be fair to the more earlier clients, that we can still trade some of the lesser liquid stocks, even though they're all above 100 million on average. But for the new portfolio after 400 million is really just gonna be mega caps and then like an ETF strategy.
And what about Turbo?
Turbo, we're completely open right now. Like we only manage about 22 to 25 million, so we've just gotten started.
Does it still 100,000?
Yeah, 100,000 minimum.
Oh, so 100,000. When you say strategy, do you mean growth tech?
Yeah, so like if you want to join, you usually can't do 50K. It has to be like 100K.
Gotcha.
Yeah,
I understand.
Yeah,
no, that's great. That's great. Yeah, because it is fascinating, because you don't really hear about, well, I haven't heard about in terms of protecting that downside, so you can actually have a maximum upside. Without having to increase risk necessarily.
Yeah, I mean, especially for you could say retail clients, like, they don't have access to the hedge funds, the best hedge funds in the world. They take pension fund money, endowments, ultra high net worth individuals, family offices, and most people don't have that sophisticated strategy. So a lot of our clients are people that have their money with Merrill Lynch or Goldman Sachs, Morgan Stanley. Not their like the other asset management side of stuff where they put you in their high fee mutual funds, and that's what we think is it's not actually criminal, but like we think like they advertise their own products. So not only do they take a fee on your AUM, they're putting you into their own conflict of interest mutual funds that are high in fees. So you're paying those mutual fund fees too when you can just buy the VOO or SPY. Instead, they're putting you in an S&P 500 high fee mutual fund, charging you like 50 basis points, 75 basis points on top of the fees they charge you. So why not just buy the VOO yourself.
Yeah.
That's all they're going to do.
Well, slightly off topic here.
Yeah.
Just because I kept seeing articles about it today, and I'd love to hear your perspective based on your sort of market knowledge and all the research that you've done. As you mentioned it a few times already, but MicroStrategy.
Yeah.
There's so many. You've probably seen the articles as well in terms of it's going to be pulled out of the Nasdaq and this and that.
Yeah.
Like it's well, Bitcoin's price is falling.
They're both not looking good right now.
Exactly.
That's
Yeah.
fair.
Like, what are your thoughts when you look at something like that? We're both having their sort of pullbacks or crashes, if you will.
Well, like I talked about before, there's times to be in the markets or in stocks and times to not. Like I said, Bitcoin and MSTR were two of our largest trades late 2024. Fast forward 1 year, they're what I call stage 4 downtrends, which is below the 40-week moving average, the 200-day moving average. And that's just a no-go zone for us trend followers. Or honestly, it should be no-go zone for most people. Nothing good happens under the 40, especially declining 40-week or declining 200-day moving average. In terms of the news of being delisted, I mean, honestly, I don't have much thought about that. Like, if it happens, that might take a toll because there's passive flows.
Pretty
go into
subjective
MSTR.
statement, right? You can get some pretty crazy bounces from that. Perhaps like for their fun, they don't want to take that kind of risk because it is a bit unnecessary, right? But yeah, it's not entirely the true statement.
From people just buying the NASDAQ. But I mean, we'll see. Bitcoin is like 32-ish% off highs right now. MSTR is far more. And they're just in downtrends. There's really nothing much to say there. We'll see if Bitcoin finds support. There's this huge level at the 70 to 74,000 area, which extends back to 2021 highs, as well as the pre-election breakout.
You know,
highs
in
before
hindsight,
Trump.
we were talking about this level in Discord, and I hadn't been checking out the sentiment data. Like, we should have known it was gonna blow through this zone, right? Literally every fucking NPC on planet Earth was talking about this shit. Should have known. Should have known. We made a note of that because you were pretty on top of it. But another symptom of being at home, right?
Got voted in and then
A
they
little
went
distracted.
overnight. So that's an area of potential landing zone that I'm personally looking at. But just because it gets there, we're not just going to buy the dip on for clients. Like,
to do the MicroStrategy.
yeah, like we're just not going to buy the dip.
Mhm.
We'll look for stabilization. You know, at least the 821.50 catches up the price for us to even be.
Is there a time element in terms of that base as well?
There definitely is a time element.
Okay.
And this is more of a, when you're studying enough charts, you can see the symmetry in the base. And there's like shorter development where, you know, you have a pullback and then the base starts to form, but there's no symmetry. And the symmetrical base is like, you know, just some examples. NVIDIA early 2024, SMCI early 2024, if you guys want to go study those. MicroStrategy and Bitcoin leading into the election. Study those bases, very symmetrical bases. Even the quantum names, INOQ, RGTI, that broke out September. You can just see the symmetry of the bases. Like, they're typically rectangles. Like, some of the biggest trades for us come from like these rectangular type bases because you just had enough supply and demand work through the bases to wring out the weak holders, to build the foundation for a higher move. And
Within these bases, do you look for like cup and handle patterns?
yeah, cup with handle is a good one, but you know, you could simplify completely. Just, you don't need to say this is a cup with handle, this is a flat base. Just sideways action. You know, characteristics you want to look for the base. Those the up volume candles or volume bars are definitely higher than the down volume candles. You want to see periods of tightness. You know, like multiple weeks tight, multiple days tight with dried up volumes. So volumes really low. That just shows sellers are disappearing. You know, a lot of bases that are explosive have like undercut and reclaim. So you break on volume candles. You want to see periods of tightness. You know, like multiple weeks tight, multiple days tight with dried up volumes. So volumes really low. That just shows sellers are disappearing. You know, a lot of bases that are explosive have like with dried up volumes. So volumes really low. That just shows sellers.
Oh, dried up. I thought he said like a trident. I was like, what the fuck is trident volume?
A lot of bases that are explosive have like an undercut and reclaim. So you break the lows of the end of the range, and then suddenly some phenomenon pushes it back in, and that's just strong buyers. Like, we want this thing, and it pushes it back in. Weak hands are completely shaken out. So structurally, there's more strong hands in the base, and that gives a higher probability of sending the stock crypto ETF higher. I want to see symmetry. Like, we've all studied symmetry. Like, if you draw a line down the middle, the left side and the right side of the base is quite similar. And I've noticed a lot of the best moves come from that symmetrical, where that symmetry where the right side of the base is developed just like the left side. And, you know, you're building higher lows. You're getting tighter and tighter progressively as you move from left to the right of the base. Minervini call that the volatility contraction pattern. We can just call it volatility decreasing as you go from the left to the right. And then eventually you'll have like, when a stock hits like a certain price and it backs off, it eventually forms a resistance level. And for a breakout, you break that level on huge volume. Ideally, it's on a catalyst as well, maybe earnings, sales, revenue growth, pre-release of earnings, some sort of partnership, and maybe new product release.
So like that episodic pivot.
Yeah, exactly. Just a catalyst-based move. Those are the best as well, coinciding with that breakout.
Where would you, I don't know if this is something you can share, but in terms of like looking to enter those sort of positions, are you looking to front run in terms of like be in before that breakout, or are you looking to maybe scale in, or are you looking to only execute once that breakout's taking place?
We'll do a combination of both. Sometimes, you know, we'll just wait for the perfect breakout. We'll just put on the full position at once. But other times we'll scale in. Like, once you identify the right side of the base being built, like if we were to do the chart for Nax, like we can look at a MicroStrategy's chart, but we were building up the right side.
We'll do the chart for Nax one day.
We could, yeah, that'd be cool. We're building up the right side of the base, MSTR late 2024, and they're just lower consolidation levels, maybe against rising key moving averages that you can build off of. And, you know, there's a good synergy between me and Connor. Like, I like the strength more, so I love the episodic pivots, the gap ups. I like buying the breakouts, and he's over time adopted more of a pullback, building against moving averages. So it's interesting, like us collaborating on a portfolio. Like, he'll start building into the position, and I'm pyramiding into the strength. So that's kind of a way like we've developed together, honestly. Where, like, you talk about the teamwork. I guess he's compliment. It's not a weakness. Like I'll sometimes buy pullback, but like my personality, I like buying the strength more,
Yeah.
and he likes buying the pullback more. So it kind of like it synergizes together to where we're building into the position. And we're
I was gonna say they can just
Still,
do it
it's
together,
very
right?
interesting because obviously you come from a similar background in one sense, and we haven't
Yeah.
touched on that yet.
Yeah.
So it might be a good time to do so. But you come from a similar background, similar ages, of course, if not same age.
Yeah.
You're working in the same environment
Yeah.
now as well, within the same sectors,
Yeah.
etc. But then different perspectives based on personality,
Yeah.
which really highlights that because I think a lot of people, a lot of the time, try and fit themselves to the market or like what's the in strategy or what's this person doing. I'm
Yeah.
going to do the same,
Yeah.
so I want the same results versus understanding. Okay, actually, wait, I am more of this type of person and this sort of personality. Let me identify the right person or strategy that
Yeah.
matches that, which will probably give you a much smoother process and learning curve
Right.
than constantly trying to force yourself into this maybe self-image or this image that you think is successful.
Right.
Right.
Exactly. And like back to the relationship between me and Connor, like overall, like our philosophy is the same.
Mm.
It's just maybe some of the entry tactics are different,
Yeah,
right?
yeah.
And so I was going to share like our built, like I guess progressed version of our version of canceling momentum.
Mhm.
Like we call it super stock criteria or magic elixir, and we look for stocks that are liquid. You know, there's high ADR because we want stocks to actually move. We
Mhm.
don't want to trade like a 1 ADR stock that's barely moving. It's up 10% in like 3 months. So we want high ADR, ATR stocks that trade linearly, right? Because
Yeah.
what's the point if a stock's like a bucking bronco, you're getting shaken out, and even if it goes up 1,000%, but it's moving like a roller coaster, you're not going to probably stay in. It's just too much. So you want linear stocks. You want stocks that have displayed previous history of making big linear moves. You want stocks ideally igniting on big volume as well. And then the part is like where we don't exactly follow canceling is we don't require the earnings sales sometimes.
Okay.
Like we'll look for a hot theme narrative or story
Mhm.
and or
Yeah.
catalyst and or fundamentals. We talk about the and or because if it has everything, like NVIDIA, like SMCI has everything, that's when we'll size the biggest. And then obviously finally the market has to be aligned. And then we're looking at price volume action charts.
Is there ever times where you guys are like butting heads on a trade idea or like, feel the opposite towards something?
Sometimes if we're really butting heads, like well, like we give each other leeway, like we'll just let the other guy take it, or maybe it'll actually prompt us to rethink like our thesis on the stock or whatever we're taking, and maybe like, oh, you're right, like I'm going to pass here.
It's interesting. It's the nature, I guess, of different perspectives.
Yeah.
But it's good though. Like, what's it been like actually to go through this entire process? It's quite rare to even find yourself, find someone so young in this position already, let alone tech.
Like we can, if it has everything like NVIDIA aligned, and then we're looking at price volume action charts.
Is there
like our thesis?
It's the nature, I guess, of different perspectives.
Yeah.
But it's good though. Like, what's it been like actually to go through this entire process? It's quite rare to even find yourself, find someone so young in this position already, let alone two people who know each other.
So funny enough, back when I said Connor and I both like like DM 25-50 portfolio managers separately.
Mhm.
So we first met when we were 13, 14-ish, I believe. This was freshman year of high school.
Mhm.
We both were recruited to a boarding school for
Interesting.
soccer. It's called Shattuck St. Mary's. They're more known for hockey, actually. Like
Wow.
some of our dorm mates are in NHL right now.
Really?
So they're doing really well. They won gold medals.
Incredible.
So they're really known for hockey. But we were both there for soccer. The teams were pretty good. And that's where we first met each other, played on the same team together. Obviously had that year dorming in the same dorms together as well. And I left after a year. It's a very expensive school. I grew up in Northern Virginia, really good public school system, a lot of great soccer teams there. And that's kind of like, we stopped talking for like 5 years, all the way through high school. And then, like I said, we both got introduced in the markets after COVID crashed, spring of our freshman year. And somehow we both got in the markets at the same time. A mutual friend of ours at Shattuck also got into the markets, and us three started just talking about the markets every single day. So it's been a really
Did you just like reconnect through social media?
yeah, social media, Instagram, I think just text.
Mhm.
And we just talked about the markets daily for years on end. And
And so when you DM'd all these places, you probably DM the same places without the mindset of, oh, we have to do this together, right?
honestly, we hope we get in something together, but without too much of an expectation because you just like there's limited spots.
Yeah.
And it's funny because
This is hard. I tried to get one of my friends who I know would be a good trader to like get into this stuff. He just doesn't want it. Doesn't
He
want
didn't
it.
even know we knew each other back
Did you
then.
do that on purpose?
Until we did on purpose. Until we got the full-time job, we were like done. So like actually we knew each other for years.
Works at Google, good data analysis.
Oh my god,
Logical.
this is crazy. And
is
so
crazy.
actually part of Revere, that mutual friend who I talked about,
Yeah.
who started training with us, he blew up completely.
Can
he went
stick to
to
a
data science.
plan.
And so we actually brought him on as a part-time data science of the firm
Oh,
to,
nice.
to help us run numbers, backtest things, just look at anything we're curious
Nice full
about.
circle.
And yeah,
Just doesn't want to
and
do it.
then
Doesn't
Don
want to do
realizing
it.
all three of us just went to the same boarding school for soccer together.
So is he hunting for the next future
Yeah.
talent?
Thing is going,
yeah,
God
maybe. So that's a
damn.
little backstory of
What's that like though? Has that been really? Do you feel that there's a lot of benefit to that actually having someone who's been through a similar path, similar journey, who gets to be in that same environment,
Yeah.
rather than say being isolated alone in this new environment, new added pressure and weight as well of,
Yeah.
of the role.
I mean, I guess we're in it together now, and we both have to take accountability for the successes and for the failures. So, like if we're struggling, like at least there's someone to bounce like your frustrations with. That always helps to like have someone to vent to. A lot of times you're training by yourself, and in huge drawdown, you just like our minds are really interesting. Like you can just start spiraling into a bad place. That makes you do more stupid decisions in the market. So it's nice to be like, okay, like talk to someone, especially someone who understands the markets exactly what you're doing, because not too many people like you can talk to a girlfriend or a friend who's not in the markets, but they won't fully understand like
Of course,
how
yeah.
psychologically, emotionally taxing it is.
Mhm.
They'll just be like, come on, like
Yeah,
no big deal.
work's
Like,
over.
yeah, it's just work. Like it's not that bad. But like, everyone watching this probably is a trader or interested in trading. All your guests are traders. Like it's really easy to like have your frustrations bleed into your personal life,
Of course, yeah.
and it's hard. Like you want to be able to separate it. And I think that's
Probably the
yeah.
opposite as well.
Yeah.
Right, personal.
Or
life
personal-
leading
It's
into
very
the-
different,
that-
right?
that's
A
right.
lot of
I mean-
people like are like. It's just hard for most people to relate to this. Because 99% of people, like, they just have some salary at their job, and whether they are amazing at it or like absolute dog shit and don't give it like a literal like any fucks at all, like they're still getting paid. Whereas like if you're trading, that's not the case. So it's very different in that regard.
We can get into this if you want, but like that did kind of happen to me, like personal life bleeding into trading, especially June through kind of like end of October. So like people follow me probably know, like my dad was battling stage 4 cancer since February, and then he passed away in
Damn.
July. So like all of July I was like spending time in the hospital. You know, having a partner helps. Like Connor, he's covering me, like doing all the daily videos instead of me doing it, watching over the portfolio. So that's another plus too. You know, like stuff happens in your life. And then the whole move from Florida to New York too. So like there's a lot of stuff happened. So I mean, obviously doing my best, being as stoic as possible, blocking out, but you know, subconsciously it's definitely gonna influence it, and just gotta give yourself some grace sometimes.
Of course.
Yeah.
You know, and
I mean,
that's a-
I mean, I won't lie, it definitely affected my training the last 4 months. Like I would say less discipline at times, you know, hesitating, selling the strength, not selling the strength, getting greedy, like being more all or nothing mentality. It's like, okay, like my dad's gone, I need to do well for my mom or whatever. It's like it kind of seeps in, and I'm kind of still reflecting back at it. But you know, learning from everything. So
what does that process look like in terms of, you know, being aware of these things?
It's a
Because these are
distraction,
and lot of
right? It's a
people get consumed.
distraction when you have
Yeah,
like
you can call it
stress going on
negativity,
from other shit.
in terms of like negative
Yeah.
thoughts or however you label it. But
Yeah.
you know, these things.
And not even
can spiral
stress,
very
just doing other shit. Like any time that you spend doing other stuff is time that you're not putting towards this. Obviously, you don't need to put every single waking minute into it, but if that is like the baseline of performance that you're comparing to, then yeah, any time deviated away from it was going to start to impact that baseline.
very easily. I
Yeah.
was speaking to someone actually recently about it who
Because there's a lot of
voicing
times where
that.
it's like that one or two things that like, you miss can make a difference in how you would have made your decision.
sort of struggles that they have, negative self-talk and stuff. And I was like, and then I had a friend who went through something, and I tried to say to them, like, the only thing to be mindful of, it's fine to feel bad,
Yeah.
it's fine to feel pain. These things are normal. The biggest thing to try to focus on is not letting it spiral,
Yeah.
because once it spirals, it can consume you, and then that's where it's hard
Right.
to come out of, right? So how is it? You know, I think trading might help in terms of being more self-aware, no doubt, to the nature of it.
Well, I guess we could talk about like my daily routines and just practices I developed over the years.
That'd be
That
perfect.
really helps with that. I mean, this last year, like I see myself as a pretty stoic person, and honestly, like I've learned to feel my
Oh,
emotions.
you can feel it. I feel
Yeah,
like, yeah.
I like it's always about focusing on what you can control, what you can change. Like put aside the things you can't change that you can't control. You know, I'm born and raised Christian. I wouldn't say I'm crazy religious, but yeah, I believe in God. So like believe in God helps with dealing with bad times because you think you're part of a bigger plan. You know, you're not alone. Some like I have some favorite Bible verses I'll repeat to myself daily too as part of my like morning routine. And talking about self-awareness, yeah, trading definitely makes you more self-aware of yourself. But I've developed just like before, like you know, my life has been pretty smooth, like no major deaths except this one. And I've just always like you know found great indirect mentors through online podcasts, reading books, like finding all the Stoics, like Ryan Holiday, you know, introducing to Marcus Aurelius, Epictetus, Seneca, all those guys. So I've been reading the Daily Stoic every morning for probably 4 years in a row now, like since college. I took a meditations in the mind class.
I read some of that
fall
guy's books,
freshman
Ryan
year of college,
Holiday.
and that really inspired me to develop a meditation practice. So I've done different types of meditations over the years. So I've been meditating almost daily for like 4 years now. And I've done like transcendental meditation. I've done mindfulness meditation. There's an app called Waking Up app, which is really good. And that's more based off like the Zen Buddhist traditions. And then I did like this like private course type thing for TM, transcendental meditation. I got inspired to do that from Ray Dalio. He said that was like a big part of why he thought he's successful. Because like when you meditate, you gain this like higher level perspective. Like you're able to like step out of yourself.
Where is that
and
book
see yourself.
actually?
And
I have more than one. It's like a Discipline's Destiny and whatnot, right? Yeah. There's multiple. Are they all in the other room? Yeah, like that. Courage is calling. Oh, it's right there. Courage is calling is up there. Ego is the enemy, etc. Interesting stuff. And yeah, I listened to like the podcast where Ray Dalio was talking about this. Pretty cool, actually. He talked about a lot of stuff in that podcast. I forgot which one it was exactly, but like he also went on like a pretty big deep dive about like the sea exploration he's doing now after like leaving Bridgewater.
obviously it's not perfect. Like we all still have blind spots.
Of course.
But, develop that practice over and over again, really like anything, like money, compound interest, it compounds on yourself. So I see myself pretty self-aware. Another part of my morning routine is journaling. So, I have some prompts for myself. Like I do some gratitude. I just talk to myself, like just journal, like what's my thoughts this morning? Like what are the great obstacles I might face in the day? What's the most important thing I have to tackle today? Like, and then I have like part of the Daily Stoic is a Daily Stoic reflection journal. And there's each day has a question paired to it.
Okay.
And these are both by Ryan Holiday, the author. And so I have a section of my journal where I'll journal to the Daily Stoic as well. And then a second daily read I have is called The Calendar of Wisdom by Leo Tolstoy. And, I've just been doing these for like multiple years now and just gotten in the habit of doing it every single morning. So the meditation, the journaling.
So a couple things here. One, what is one of the hardest things you went through when trying to build that habit of meditation? Because I know meditation is something that a lot of people struggle with. I've struggled with it in the past in terms of being able to build the habit of it,
Okay, so I guess a side tangent. Besides all the trading books, this is like one of the most important books I would recommend to people, which is Atomic Habits by James Clear. Like,
our friend Lance is obsessed.
yeah,
Really?
I've read that book probably 3 times over, and it's probably the one book I've gifted to my friends. And I did it back in college, and it's funny because, like, one guy read it multiple times, and he's developed some really great habits and doing really well right now. But I just think like we are like our mental habits, our physical habits, what we do every day, like we're a product of our habits. I think either Aristotle or Socrates said this. He said, we are what we repeatedly do, and therefore excellence is not an act but a habit. So it's about choosing what your habits are, doing those over and over again, and just building small on each other. Like you don't have to start with something big. James Clear talks about first building consistency and then scale it up with intensity.
Yeah.
So you can't sit there for 20 minutes, sit there for 1 minute, and then you can do 5 minutes, maybe a few months later, and then you want to build that habit first, and then you scale it up.
Where do you feel where are you at on average now?
I'll do like, honestly, I used to do way more actually than now. I used to do 20 minutes twice a day, but now I just do like 12-ish to 15 minutes every morning. I don't do the afternoon one now, but before, when I had more time in college, I did 2 sessions, and it really helped me. Like after every meditation, like you just feel this bliss, like you feel like you think clearer. You feel like
the chaos of social media, chaos of the markets, of day-to-day life.
Yeah.
Like if you want to put everything else aside, meditation just allows your mind to just be calm for a moment of rest. It's like a recharge.
Yeah.
It's like charging a battery on a phone.
If meditation is not for you, have a daily walking practice. No podcast, nothing. Just walk around the neighborhood and I think the most important thing is have some time for yourself and only yourself every single day. Like have that period of solitude. At least for me, I really enjoy periods of solitude for myself. And I see myself as a pretty extroverted-ish person, but I've learned to appreciate stillness and having that time with yourself. Because, if you're caught up with all the daily activities, other people's thoughts on social media, you'll never have time to spend time with your own thoughts. And like, this goes back to more philosophy, but like knowing thyself is one of the most important principles in trading too. Like you got to know yourself, your psychology, what type of style you want to trade. Know when you're feeling FOMO, when you're feeling envy, comparison, when you're feeling greedy. Those are all like critical parts of developing as a trader. And I just say like trading, honestly, like all the self-improvement stuff was for trading, but over time I've realized how important it is even aside from trading. So like in the beginning was to hopefully make me a better trader, doing all these things, going to the gym as well. And like going to the gym, doing all those practices to practice discipline, building good habits was for trading, but now I just enjoyed doing them like as separate entities. Like if I stopped trading, I'd still be doing them. So gym every morning as well after that.
Have you noticed when you've been off plan or routine, how it's impacted your training there?
Yeah, so these last 4 months, like I talked about, moved up to New York City like 2.5 months ago, and I was kind of thrown off my habit a little bit. It takes time to adapt a little bit, like build a morning routine, get the timing right, so you have time to like do pre-market
climate
as well. Yeah, different climate. Building a gym routine. Like I'm walking everywhere now. It's like the first time I haven't had a car in my life, so it's definitely a change. I'm enjoying it. Like it's really easy to keep weight off here because I'm walking everywhere. Like, and walking is probably the best thing you can do. But yeah, I kind of had to develop a routine here, and also the whole dad situation. I was definitely a little less disciplined. Like to me, pure discipline is when my 5:30 alarm hits, I'm out of bed. I'm in that cold shower. But like I'm back.
Yeah,
on
this
that track,
motherfucker's
so
crazy.
I felt it in the market. Like I feel more disciplined, more calm. But like September, October, I'd maybe like, all right, I'm gonna sleep another 15 minutes. I'll get up at 5:45, or I'll be like, I'll sleep till 6, but I'll still get to the gym. I'll still get everything done. But then I'm rushing in the morning, and then I feel bad that I didn't wake up.
Just
so
a whole different pattern.
Yeah. So to me, it's like starting the day is so important. Getting up early on the sound of my alarm, and just like not falling to that weak voice of like, all right, the bed is nice, like it's warm cover, but like you get up and just get your day started.
I love that. There's so much more topics to go through, which I would love to talk about.
Yeah.
That actually you mentioned as well is in terms of like drawdown periods.
Yeah.
What does that look like? What does that process look like for you? Maybe if we can actually do 2 examples, or potentially maybe earlier in your career, or maybe where you would handle it poorly and what that looked like, versus maybe now where if you handle a drawdown period or a recent drawdown period, and what that looks like in terms of how you handle it and why it's so different between the two.
Okay.
If different.
Yeah, there's definitely difference, and I'll bring this up. Early on, like when you get a big drawdown after that SPACs period, you're like, it's over. Like I'm skillless. Like I can't, like you just feel lost. You don't think you're ever gonna recover. But after many market cycles, like I've been through the 2022 bear now, and then this crash. So, and I've caught some winners, have some losers. So now you have that confidence to know that like, okay, I know I can catch big winners when the time comes. So when you're in the drawdown, I just keep reminding myself, like I'll review my big winners. I'll remind myself that I haven't just lost my ability completely. It's just the function of the market that's getting me chopped up or making me frustrated. It's not myself. And I think that's really important over time when you develop enough experience to know that like from every bad period gives birth to another good period. So you just have to understand like markets are cyclical and that nothing's forever. And that's what, and people get caught in that. Like during a bull market, you think it's gonna go on forever. You get caught on the downside. During a bear, you think it's gonna go down forever. So you never re-engage in the market. So it's almost like just reminding yourself that it's almost reminding yourself during good times, there's going to be bad times ahead, but doesn't mean you're going to be pessimistic. It's just awareness of that. And then during bad times, you always have awareness that there's going to be good times ahead. So it's like kind of balancing. It's kind of balancing like that. But another
You just
part,
got on there. It's just part of the game, right? It's part of the game. Like your account equity curve is not going to be all time fucking high every day. So better get used to taking some L's.
in terms of, sorry,
The key is to just stay alive, right? Just don't blow up your account. It's the same thing, right? Every fucking trader, doesn't matter what they do, what strategy they do, blah blah blah. It's always the same story from today. It's about managing risk. All this shit is.
No, go ahead.
for the drawdowns, like, yeah, just like when you have experience, you know there's gonna be good times ahead, so you can be more level-headed. But I guess earlier on, like I would dig in and start sizing up, thinking like I want to make the money back. But I mean, I'll be honest, like with the whole dad situation, moving up, and then like I got like strep throat in September too. So it's like everything at once, and then I have like some skin condition called psoriasis. It's like mild, but the strep throat is a trigger to make it flare all over. And it's all gone now because I'm on like just like an injection, so that's helped a lot. But like all September, that was on my mind too. So it's like this last year, it's like first major death, first big like health kind of thing. So it's like all these things. So like definitely got myself chopped up more and been a little less disciplined than I have in the past. And I definitely had awareness of that during the whole time. But you know, things happen, and sometimes you still keep trading when you shouldn't be trading, get yourself chopped up. But as long as you cut losses and don't hold big losers, you still can't get yourself in a absolute terrible situation where you just lose your whole account. And that's what matters. Like even if you're worse,
There you fucking
during the worst
go.
periods, you still don't draw on too bad. You're gonna do well in the good periods, especially once you've developed that foundation, like the foundational knowledge of like all the
There
pieces of trading
you
we were talking
go.
about before.
That's the key goal of a trader, right? To keep the losses small.
Yeah.
And I think it's a really important point that you shared in terms of the reality of trading. Like trading, especially in the environment that you're trading in and the levels that you're trading at, but regardless, at the end of the day, if you're trading for a living, you have to be able to understand that as part of that reality, life is going to also show you some harsh realities at time, and it doesn't care if you trade. And trading full time, and if that's really your core and only set of income source, the reality of having to really sometimes dig in and keep control. Sometimes it goes a little out of control, but as long as you keep it little and you're aware of what's going on, it's going to be super, super important.
Definitely.
So I'm very thankful for you sharing that with us all.
Yeah.
But just to really try and hit some topics before we start to sort of wind down.
We could be here forever.
We could. I really enjoyed this, and I hope we're able to do it again, and maybe even have like a Revere roundtable potentially.
Oh, that'd be cool. Don Breen Connor.
Exactly.
That'd be really cool. Yeah.
We'll talk.
Oh, yeah.
And then Charlton X as well.
Okay.
But themes. I want to talk about themes because it's something that I had a great interview over 12 months ago now with Luis Borsellino, who was like one of the biggest S&P traders.
S&P.
S&P.
Oh,
The Chicago Pits. Oh, that's my fault. I mumble a bit sometimes. But S&P traders, one of the greatest traders ever from those times. But what was it? And he stopped trading when it went electronic.
Oh yeah.
So what was interesting is, and I had him back actually a couple of days ago. And what was interesting, however, was even the principle of back then was the same. Follow the money flow, right? Just essentially follow where the money's at, the themes, right?
Yep.
So what I'm interested to hear your thoughts on is, what do you look for to identify a theme, especially when before it's really became a theme to everybody, right? Because normally when it's a theme to everyone, most of the moves has already taken place. So like, what are some things that you try and look for to try and identify, okay, this could be a theme that we should take advantage of now to really maximize those returns?
Before like into the theme part, you talk about like when it's a theme to everyone, like it's nice catching themes early, but if you're too early, you're sitting there doing nothing, right? So you're wasting time. Obviously want to catch exactly the turn, but that's not always feasible. Like you're going to be somewhat late to the theme. We got to realize like the bigger the catalyst and bigger the theme, the longer it's going to last. And the theme could like go short term out of favor, but that's just a potential opportunity to get along for the ride for the theme. And even when everyone knows about the theme, that could be when the most explosive moves come, like we talk about the George Soros and bubble thing. And that's why we really emphasize, like when we talk about the climax top sell rules, stock accelerating, heading in 12 o'clock direction, and then having your trail rules and selling the weakness. If you have principles to sell the strength and weakness, and you know how to analyze the chart and the trend, you don't have to be too scared as long as you can manage risk properly to join a theme. And even late stage themes, that could be the best times to catch that last blow off move. So, but back to themes, like we have sector ETFs. Market Surge is a platform we use. They have like 196 groups. So we'll do a combination of top down and bottoms up. So like looking at sector ETFs where the money's flowing, tracking like daily, weekly, monthly returns. But in Market Surge, and I use DeepView now, if you're familiar with that, like the Trader Line guys. There's ratings called relative strength rating, absolute strength.
This is the thing that I was talking about yesterday too.
Say their names on the podcast. I remember.
Oh,
I remember. Yeah, I saw that.
Actually,
they're like, make sure you
actually
remember it.
Or a tangent here too. So Trader Line, I actually did a unpaid internship with them.
Oh, really?
My junior year summer. So this is
before Revere.
Yeah, before Revere. So
nice.
Okay, we're going off a tangent, but we'll
It's
come back
okay.
to themes. We'll come
Oh,
back. We'll go back a full circle to themes.
Mhm.
But I was prepared for all my demo applications. I sent them all in June 1st. That was like the first day it opened, and then I had a 3-month period of just nothing. So I already had like maybe 10,000 followers on Twitter. I DM'd Richard Moglen, who's a co-founder. I'm like, can I just like do an unpaid internship with you guys? I want to just learn a lot about the market. So over that summer, I helped them build like Stan Weinstein's stage analysis course.
Oh, nice.
Yeah, so that was really cool, and just really learning stage analysis. And we haven't even gotten to that. That's a huge part of how we look at the market.
We're gonna have to.
Yeah, we're gonna have to. Learned a lot from them during my time there. That's like where read like 10, 15 books, a lot of reading, just like applying it to the markets and even learning from the guys there. And part of how I was able to have a little bit of street creds with just the regular bio background from Don is Don highly respects TraderLine, and especially Ross, because Ross Haber was a ex-portfolio manager for William O'Neill.
Oh, wow.
So he has experience, and that helped me get like a lot. And Ross was kindly enough to give me a reference to Don too, so that kind of helped me also get in the door.
Amazing. No wonder they were saying
That's why we can't forget TraderLine. Rye, Richard, Ross, Nick. Big shout out to those guys. They put out a lot of great content too.
No, they do.
And
No,
they're
I
great
respect
guys
them. The
too.
funny thing is, I didn't know about them. And I think when I went verified on the podcast and started to interview more, people who were in similar circles, I came across them and I was like, wow, I didn't even know this was here. But to your point, really, really great content over there for sure.
They got a good podcast too. Richard does the podcast, but
Yeah, no, Richard, we haven't spoken at length.
you guys should do a podcast together, the podcasters.
That would be good. But no, he's great. He's great. I think there is a world where something happens for sure.
Yeah.
For sure.
Yeah. But looping back to themes,
Yeah.
quick little TraderLine. Back to themes. Looking at sector ETFs, so that's more top down, and then bottoms up. Just going through our universe scanners, our momentum scanners. You're gonna start seeing stocks acting well. With catalysts showing big volume, big price action out of bases, or stocks setting up a basis together. And then nowadays it's so much easier. I'll have like my Perplexity or ChatGPT like created prompts, so I'll just put the ticker in. The instructions are already there. I posted the prompts I use on Twitter already. Maybe I can send it to you and you can link in the show notes or something like that. And so literally like I have it pre-programmed exactly what I look for. I put the ticker in, it explains it like a stock to me like I'm 12, then it gives me a more professional description, a whole table of like the last 3 months of news, what happened on the news, like the effects on price. And I mean, when you quickly read that and then there's a bottom line of what the company does, you do that enough to your watch list, your brain will just start picking up like, oh, there's a cancer diagnostics company. And right now, the reason I mentioned cancer diagnostics is healthcare, pharma, and biotech are clear standouts right now. And it would be the themes or groups of interest, especially as the indexes round out, find some support, reclaim the 21, all the things we talk about. Healthcare, pharma, biotech would be number one on focus. But for cancer diagnostics, you just want to be paying attention to news events, PR events, catalysts as well. Oftentimes, a catalyst of one company can completely ignite that whole sector. And so AI has been a big one the last 2 years, but like on this cancer diagnostics one, there's a company, EXAS, it's a smaller one, but it recently got acquired by some other bigger company, and that led NUVB to go up like 50% a day. GH recently gapped on earnings, good earnings and sales. They have also a proprietary product for cancer diagnostics. It flagged sideways and saw a move, but it reversed yesterday on the pressure of the markets, and now a little pressure was released off the markets today, and it almost zoomed back into new highs. Grail is another stock, another cancer diagnostic stock, seeing good action. So when you start perplexing querying or AI querying, all these like stocks are acting well on your watch list, especially you see that they're all in like the pharma group. You look in more into it, and then you see this niche, like this cancer diagnostics theme. But like just pay attention to the news. One thing I learned from Stanley Druckenmiller on themes is that you want to pay attention to what the smartest people in the world are thinking. Like, I don't think I'm anywhere close to the smartest people in the world. Pay attention to what Elon Musk is thinking. Pay attention to what some of these leading thought leaders in various technology spaces are saying and thinking. If you have the data of like what MIT, Stanford grads are doing or Harvard grads are doing, that helps a lot. Like Druckenmiller said, he identified the AI theme in 2020. No one talked about AI in
Interesting.
2020.
It's an interesting way to go about it,
A lot of
actually,
Stanford,
right?
MIT computer scientists, engineers were moving out of the blockchain space into AI back then.
I understand,
And major breakthroughs take time, right? And then ChatGPT comes out late November of 2022, and that was the catalyst for AI. And Druckenmiller was already in NVIDIA before that. Like his partner was like, this is probably the best way to play AI. So they were in that before ChatGPT came out, and that only just validates thesis more because ChatGPT comes out, everyone's like, wow, it's like you're talking to a wizard here, and like a know-all kind of bot that responds to you. And it was way worse back then than it is now. It's so much better now. And institutions will instantly start digging into this. Like, what does it take to operate ChatGPT? We all know it takes compute, so GPU chips, it takes memory, networking, all this stuff, and then data centers, you have racks,
spread it all.
and then Druckenmiller talks about how he looks at themes in concentric circles. It's like, imagine one circle and then there's another layer, another layer. And so to me, that inner layer would be ChatGPT, the catalyst. And the next layer would probably be chips, GPUs, anything to build those data centers, networking, memory. And you go out another layer to power those data centers. You need all those power generation names. And there's so many different sector, like sub themes in just power generation alone.
So you would say really in terms of identifying themes, it's really taking a step back, thinking maybe outside of just the charts.
Yeah, exactly.
To identify, okay. And then probably even looking at a more macro view of not just
the charts help you get to the themes.
Yeah.
In the video seeing accumulation. But once you've actually from us, we do let the charts lead us to the themes, and then we'll start digging in more.
Okay, yeah.
And then there's more of the top down macro, the down, where you identify catalysts and then you start seeing the themes. But just pay attention to the news cycle, what smart people are thinking. I watch so many podcasts, like yours included, Lex Friedman, Joe Rogan, like all these podcasts, they bring on some of the smartest guests in the world. And this didn't really exist really just like 5-6 years ago. This podcast made this huge boom. And you have like Elon Zuckerberg, Bezos, and all these smart people, Jensen Huang, like Sam Altman, just making podcast appearances because it's a win-win scenario. They're sharing what they're doing.
Yeah.
but at the same time for the guest, like the more value the guest provides, the listeners are also getting value. So
course.
it's a win-win for everyone. They're also projecting out their message, what they're building.
It's the same right here.
Yeah.
And incredible.
Yeah, exactly.
We have a couple more two top major topics to try and I guess in some way quickly go through.
Yeah.
But the stage analysis, I know you
Okay,
called out.
stage
Let's
analysis?
go through that. Yeah.
So to simply put, Stan Weinstein, I mean, he named it stage analysis, but Wyckoff before him has also his little patterns, but I've resonated most with Stan's. And it's just a price cycle. We talk about market cycle, psychological cycle, economic cycle. This is just price cycle of stocks and more of a longer term time frame. It's focused on the weekly chart, keying on the 30, 40 week moving averages. I'll use the 10, the 20, the 30, and 40 week. And pretty much there's 4 stages. Stage 1 is the basing phase after a stage 4 decline. So after a stock or an asset has made a huge decline, that sideways period where it does nothing for could be months or even years, it just chops around at stage 1. And that's when prices like maybe oscillating between the.
This is the same thing the other guy
the
talked
prices
about, right? Whereas this, like, I'm sure I have a screenshot of it in here. It was the Oliver Kell guy. Yeah, it was right here. All just doing the same shit.
Oscillating like above and below the 30, 40 week MAs.
Yeah.
Eventually, maybe some sort of catalyst, something sparks to move up. You break up above like the 30, 40 week, the slopes of the lines. And I really care about slope and alignment. So like the slope of the 30 week is rising. And ideally for me, it's trending above the 10, 20, and 30, and 40. And all the slopes and lines are aligned. So 10 stacked above the 20, stacked above the 30, stacked above the 40. And those are SMAs over EMAs.
Okay.
For me personally. And
why would you make that difference?
I just, to me, like if something's been part of my system, I know how SMA is calculated. I still don't like EMAs are more esoteric, and I just like I will use EMAs on a short-term time basis, but on long-term time frames, I've just found SMAs are better.
Right.
But when you have all those MAs aligned and rising, maybe like that 45-degree angle pointing at the 1 to 2 o'clock direction, prices above the 10, that's a stage 2 uptrend. Eventually, stock asset gets tired, maybe has a huge break of the 10, 20 week on a huge volume. That could be a potential sign it's starting the stage 3 phase, which is the topping phase. And then eventually, the 10 starts flattening, the 20 starts flattening, the 10 gets below the 20, the 30, 40 start catching up too. Prices oscillating above and below all those moving averages, and eventually, you might have some sort of news event or just naturally stock breaks down. Now that you're trending below a declining 10, which is below 20, below 30, below 40, and now you have a stage 4 downtrend. So those characteristics happen time and time again. The whole cycle usually probably lasts like from one stage 1 to another stage 1. It's like a wave, like in physics you have waves.
Yeah.
It's like probably lasts 2 to 4 years, that cycle. And that's usually like, it kind of lines up with, you have a bull market that lasts like 4 years, bears last an average of 9 months. So it kind of matches up with that. But that stage 1 period could last years. So you don't want to trade stage 1. You don't want to trade stage 3. That's where it's choppy. You don't want to trade stage 2, long in stage 2, short in stage 4. And just like looking at the alignment and slope of the 10, 20, 30, 40 will literally keep you out of trouble or in where you should be. So that's a brief summary of stage analysis.
We'll get that for Chop and I.
Yeah, we could definitely do that. Yeah.
I think that would be a great segment.
It's a complete copy of Stan Weinstein. It's just
that's okay.
Building,
don't mind.
it's just building off the knowledge of the greats before.
Of course. No, and I think that's interesting because, as we said earlier, a lot of people try and find this fancy new methodologies and normally find little success versus if you really just go off what works. And it's been proven to work. If you look at, it was interesting interviewing recently a lot of the US investing champions, people who have been on the leaderboards.
Yeah.
Pretty much all of them are using this, mentioning the exact same books, William O'Neill and pretty much all the same principles, same methodologies. And it was really blowing me away. I'm like, okay, it seems like most people have the similar mindset, which 9 times out of 10 you would hear and go, or for the mass majority of the community might hear that and say, oh, it doesn't work then.
Yeah.
But it just doesn't seem to be the case.
Well, so the thing is, there's some periods it works, there's some periods it doesn't. The people that don't understand that there's an on and off, that's kind of what we like emphasize at Revere. There's a time to grow, there's time to protect. If you don't understand the distinction of like when your edge is in favor and not in favor, that's when you get frustrated and quit. And when a lot of people quit, that's precisely when the strategy starts working. Like it does get crowded at times. And that's maybe when breakouts stop working. Like there's more frustration at the breakout level. But those people will get rinsed out and quit, and then the breakouts will start working again.
That's it. Yeah. Always the case, isn't it?
But we're all like building off foundations of what has worked because it's rooted in supply and demand of human psychology. Like for example, my SPACs edge was a real edge, but that lasted 9 months.
Yeah, and
that ended. And if you read the Market Wizards books, you've like studied some other traders too, like they've had temporary edges before too, and they also have to go through the shock period of like rediscovering themselves. But if you base your system off principles that are timeless, they're never really going to stop working. Like this is just one style in the markets, right? There's different ways to skin the cat. Buffett style is buying good businesses. Like there's always gonna be good businesses in the world. If you buy them at to what he calls a cheap enough price, like having that margin of safety, you're gonna do well. And there's complete copycats of Buffett that have made billions just completely copying Buffett.
Yeah, that's true.
Yeah, so, it's like it's all rooted on principles that work. You just have to choose the style that fits your psychology. And honestly, a lot of times it's what you're introduced first into the markets.
Definitely.
Yeah.
One thing that you've mentioned many times is the amount of books that you've read, which I find fascinating because I'm the type of guy who has a bookshelf behind them full of books, and I've read like 5, and that was many years ago. So I would love to hear, and I'm sure hopefully there's a lot of people in the same position as me. If not,
What was the point of that?
Reason, but
I haven't read every book in the bookshelf. It's probably like 50%, right? 50, 60.
That's still better than mine. Mine's like 5%.
I accumulate a lot of books though. Like I'm like at some point I gotta start buying books. I gotta actually read the books. But you know, like
Well, that was that process look like for you? Is it something where you're just reading a consistent amount per day? Have you, as you mentioned earlier, learn how to learn? So in this case, like,
But
learn
why
how
not
to
just
read
buy
maybe
them
more
as you read
effectively or
them,
better
right?
speed and still, I find myself where it's really weird actually, where when I get into a book, then I'm into it. And
oh yeah.
But I also find myself sometimes just ghost reading, if that makes sense, where you
Yeah.
kind of like, you're going through the words, but then you're not actually taking it,
Yeah.
you're daydreaming. So,
Exactly.
like, what is there any sort of tips you found?
Right now I'm more in the phase of like reading a little less. Like my massive consumption phase was that like beginning area.
Got you. Yeah.
So I definitely read less trading books. I'll reread books. I try to read 30 minutes before bed, especially on weekends. I want to read more, but just moved to New York. I'm really trying to meet more people, just like get dinners with people, going out the city, check it out. I think that's important too, relationships.
yeah.
But yeah, definitely like replace your, I'd say the best practice. And I know Lance is big on the health stuff. He talks about like sleep a lot. Dr. Matthew Walker is a big, figure in the sleep space, and blue lights are really bad for us. It just causes, it suppresses melatonin release, which is like the molecule that kind of makes us sleepy. And so replacing your phone an hour before bed, replacing the book might be the biggest win-win like deals of all time. You get better sleep, so you're gonna be more energized.
I'm terrible.
I'm terrible too. I know. And then you get on your phone. But just pick a time in the day where you can make it part of your routine. And I'm trying to get that back actually, because I've kind of been thrown off my routine a little bit. But just like making exercise part of your routine, or making pre-market routine part of your routine, or post-market routine. Just make reading, whether it's 10, 20 minutes, just part of it.
It's almost a mindset shift as well.
Yeah.
So, what was it? Something like with me, I struggled with like just getting on gym for years and diet for years. And I finally did it this year. May not look massively like it, but we're shrinking slowly.
Nice.
But the mindset
just
shift for me,
just beginning is the most important part.
exactly, yeah. But the difference is I'd started before and I'd go up and down, up and down, up and down.
The ball
and then this year,
rolling.
I felt the shift when I finally made this choice of
That's
like,
great,
I
man.
want to
Fuck
be
just
healthy,
happened.
but
Great.
I have to go gym.
Oh, part of Atomic Habits, he talks about goal-based habits. So it's like, for example, I want to, there's different goals, but like, let's say you want to lose weight. I want to lose weight this year. That's a goal, right? Then there's system-based habits. I will go to the gym 30 minutes, 5 days a week, and I also eat XYZ for X amount of meals a week. But then there's an identity-based habit, which is what you said. Like, instead of like, and that's the highest level to really truly live it is, I am a healthy person, or I am a person who goes to the gym, and then that's really
It's like, oh, I quit.
it's like kind of how you see
days ago.
it's how you see yourself.
Yeah. The people who are counting how many days since they last drank or smoked, they're still that person.
But
Versus I don't do
it
that.
ties hand in hand. Like your belief will influence your actions,
Yeah.
but your actions also influence your view of yourself, and it just compounds. But it's also vicious the opposite way too. Like if you get lazy, you're gonna see yourself as a lazy person. So you're gonna be more lazy. So you gotta just like break through, and that's the hardest part. Just getting yourself on the right track.
Ted, again, we could do this all day, and I would love to, but we have two last questions for you. Okay. One is something that we've been asking all of our guests just recently randomly popped up. I don't know, have you ever watched Diary of a CEO?
That's like a top 10 podcast.
That's amazing.
Yeah.
So
Is this from the previous guest?
No. So I tried that.
Yeah,
And it didn't really work out too well.
He has a cool book where he has everyone like write down their next question for the next guest.
I know. I tried it. That's what I'm saying. I tried it because someone suggested to me, and I was like, I'm just not sure if it works for trading, etc.
Yeah.
I tried it, and it just didn't work out too well. Especially because then I realized afterwards that I don't always post all the episodes in the same order, so then it might not work.
Right.
So that was another element. But yeah, I think some of the guests. It didn't work because basically one guest asked a question, and I obviously gave it to the next guest, and then he asked the same question, and I was like, I don't think he understood the premise of this, or he didn't realize he gave me the same question. Anyway, but the same question is good, which is this question, which is it doesn't have to be to trading; it's more your own personal philosophy of like and the reason I'm asking is actually because I find it fascinating in trading. We all always talk about trading. We talk about markets, talk about the charts, talk about P&L. It's very easy to think that that's all that matters. So, question being, what does success mean to you?
So part of what gave me the courage to drop like the traditional dental path was again from a book I read called Ikigai. It's a Japanese philosophy that translates to like meaning for living, or reason for living. And there's 4 segments of Ikigai. It's what you love to do, what you're good at, what can make you money, and what you can do to help others. And when you have all 4 of those, you have your Ikigai. And to me, like what I'm doing now, like trading for myself, actually, I feel like I have less of a purpose. Like I have like what I'm good at, what I love, can make me money, but it's not helping others. But being part of asset management, especially like the mission that we're pursuing as a company, it has all 4. And you're doing it. And again, part of success is doing it with people you enjoy being around. And so I'd say success, I mean, for me, health is first. I'm not too religious, but I think faith is important too. Like, I think that helps temper our own ego and pride when you realize you're not the center of the universe. There's something bigger than yourself. And whether you can see that as a God, you can see that as the universe, or you see that as humanity as a whole, that's important. And then like definitely friends, family, loved ones, and then taking care of your health. So to me, like that's the 3 pillars. I'd say health, relationships. To me, I really care about financial freedom too, because then you can enjoy better times with your friends and family. You can go on nicer trips, have experiences you normally wouldn't have if you don't have the financial freedom, or even having the time too.
I love that, Ted. And then final one for you. For anyone struggling out there, let's say if it was early on in your trading career, but anyone who's out there who's not really quite where they want to be, and we're coming into 2026 shortly, what would be your biggest advice for them, or action steps for them to start seeing some progress, or really start to get on the right track in trading?
I would say 1, learn from the greats before you, because clearly they're great for a reason and they found something that worked. And so don't like, I feel like a lot of people that want to only figure it out themselves is partly an ego thing. It's like, I want to figure it out, but you can cut away from a lot of the frustrations and unnecessary failures. You're still gonna have failures, unnecessary failures, if you just learn from the great traders that come before you. So find a mentor. It could be indirect. You don't have to know the person. There's so many great traders that have you know, they teach courses or they have a Discord, they have a room. There's so much free content, including yours as well. So there's just so much wisdom out there. You just have to have a thirst for knowledge, curiosity. You gotta be open to receiving the information as well. And I would just say, like, I mean, life is just a whole game and it's a whole journey. And really, I mean, it's so cliche, but like the more I reflect on it, when I get too hung up on the results and the money, that's when I actually do bad. But when you like are more, you know, just like moving along life, just seeing everything as a game, it really helps. And just learn from your mistakes, your failures, your setbacks, see them as opportunities. I mean, Michael Jordan said it. He said, like, what made him great wasn't like some crazy ability. Obviously, he has a crazy ability, but it was like missing so many shots, thousands of shots over and over again. And we remember him for the ones he made. So it's about learning from your mistakes and not getting too hung up on the mistakes and dwelling, but take the lessons and then just move on, focus on the present, plan for the future. And, you know, at the top of my journal, one of my favorite quotes is actually from a children cartoon from Kung Fu Panda, and it's Master Oogway. Have you seen Kung Fu Panda?
I've seen it, yeah.
And, you know, under that peach tree, he told Poe, he said, yesterday's history, tomorrow's a mystery, and today's a gift. So that's why it's the present. So you don't want to dwell on the past or the future because they don't exist. The only time that exists is now. And yeah, just focus on the now, enjoy the moment.
Interesting.
Well, wait, and no one would have seen that coming.
Yeah.
I love that. And Ted, yeah, thank you so much for being here today.
Thank you.
You know, it's been a true honor, and I hope to do this again in the future with you again.
Interesting. Nothing particularly useful in there, honestly. I'm kind of like, all I already know it. I mean, I guess the way he goes about shaving with some other stuff was a bit interesting. Curious to look at some of this stuff, but other than that, it's like kind of just the same old shit. But that actually, the really interesting point was kind of like paying attention to what like research labs and like masters / PhD students are like moving into. And I never gave that much thought, but like makes sense, right? Anyways, we'll close this. Close that. And we're out here. I'm so tired. Like, I've been blinking like non-stop. My eyes are so dry right now. Like, fucking tired. I mean, in terms of a juice box, I don't really need one, right? Nothing's really changed from yesterday. Quite literally. Like, the shorts, definitely the same story. Maybe you can kind of like take this kind of thing if they give you it. If we are gonna go from here, but like a little sus. A little sus. But yeah, like levels of the downside haven't changed, levels of the upside haven't changed. So sure, maybe you can kind of weasel a scalp in this kind of lower time frame stuff, but the real juicy moves are gonna be these higher time frame levels. In terms of tomorrow, what time is this thing actually? Let me make sure before I forget. I have it written down here on my laptop, right? I have to see the doctor at 7 p.m. I'll probably be back. Probably like around 8 or so. I'll probably hop on for a bit after that. Yeah. I think that sounds about right. I'm out of here. So a quick chat shout out and get out of here. There's not much of a chat shout out, right? Shout out to Jonathan Brawler. Hello, I have a question. Never asked the question. Shout out to Gio Gonzo. Shout out to me, right? Fuck, shout out to me. But yeah, I'm out here. I'm tired. I'm back at it again tomorrow. Curious to see how these trades progress. But for now, it's time to get some rest. I am out of here. Later. Later.